All right, good morning, everybody. Good morning. Happy Friday. We made it to the end of the week, guys. Nice work. Sophia, good morning. Nice to see you. Tam, good to see you. Bobby T, Mike M, Diamond David, lurking in the shadows. Doc J, I see you. Good morning, Mr. Solar, Jerry S, Dano, Derek, Nubian Man, Rakesh, Ron, Edwin. Everybody's here. D, Miraboy, and K. We got the whole group, guys. How's everyone doing today? It's Friday. Everybody happy? End of the week. You've been working hard all week, studying. One more day, then we're going to rest our brains, right? Give it a break. Gotta rest those brains every now and then, guys. It's an important thing. Good morning, guys. Friday at last. That's all right. Friday's my Thursday. I still get to work a little bit on the weekends. Makes me happy. Um, my name is Mark, for those of you that are brand new. Small audience so far on a Friday. People typically drag in a little late. That's okay, as we're going to do what we did every day this week. For those of you that are in your first week with Nexgen, you're going to recognize that repetition is key to what I do. The message is consistent. The message is the same every day, every week, the first hour, and we talk about the absolute best of the best. And the idea is that we're going to build a foundation for you guys, and you're going to build a foundation for yourself. You're going to allow it to be simple. You're going to keep it focused. You're going to keep it really angled at the best of the best. Good morning, Miraboy. Um, and I'm going to teach you how to do that. I'm going to give you everything that you need to be successful with the software. I'm going to provide you with the rules. I'm going to walk through and talk through the rules. We're going to associate the rules to the advantages that they provide. And we're going to talk about how to find your entry when those rules are met, guys. All of this is going to be handed to you on a silver platter. And then here's the kicker is I'm going to teach you how to study these rules. I'm going to give you the tools you need to go back to test them, to hopefully do your best to disprove them. Go into it angry. This Mark is full of beans. I'm going to take his checklist and I'm going to follow it and I'm going to prove to him that this isn't what it is. And the cool thing is when you do that, you're with me for life, guys. We're BFFs, hanging out, family reunions, everything. So we're going to do that today. Same thing we did yesterday. But first, this is part of my routine. When my charts are coming up, it's important to me that I understand when news releases may be happening. And I don't trade the news. I don't worry about what they're saying. It doesn't matter to me. Today is Friday, July 14th, and at 10 a.m. there is prelim UOM consumer sentiment. Guys, couldn't care less what that means. Not even a little bit. But what I do know is that when this high impact news release comes out, or when these medium impact news releases come out, is that the market may jump, it may spike, it may change direction seemingly from nowhere. And quite often, news can create an untradeable situation. It's fun to go back and look at what the market has done after news, because what you're going to find is that the patterns that we teach each and every day still hold true in times of chaos, because these institutional traders, they know where they're getting in. They know where they're taking profits. And guys, we're going to use Fibonacci to kind of get that sneak peek at what they're thinking and just wait for them to do what they're going to do. And we'll take the advantages they provide and turn it into trades. So every morning, go into the news, making sure that we're not jumping in front of anything. And then I'm going to go through the path one more time on Friday so that it's really clear how you get to where you want to be. And it starts with posting your trades in class. And guys, this says post your trades in class, but I don't want it to be just your trades. If you look at your charts and you have even an inkling of uncertainty, if you don't know what you're looking at, if you're not sure what is going on, I want you to take a picture of it. I want you to post it in the room. I want you to post a question on there. Hey, Mark, I'm studying my termination conditions. I believe that this is one, but I'm not sure. Can we walk through it? And the answer is always going to be absolutely. Absolutely, I will. Every time you take a trade, win, lose, or draw, I want you to post it in class. As a brand new user, you're going to be uncertain of whether or not you're following the rules. You're going to be uncertain of whether or not you're reading your indicators correctly. If you post that picture in class, we're going to have a conversation. And to be honest with you, it's very much like a private session. We're in the room. I'm looking at your question. I'm speaking to you, and we can have a conversation and get you clarity. And I'm telling you that we have some great conversations in this class. And every time we do, there's typically an aha moment. It clicks for not only the person who asked, but also somebody that's kind of sitting in the background going, man, I was wondering the exact same thing. The second thing is using the spreadsheet that Nexgen provides. If you go to Nexgen Study Picks folder on your desktop, it was placed there when you downloaded the software. There is a version of the spreadsheet. And if you go to the tutorial section, if you want to download a fresh one, it's what we call the trade tracking sheet, guys. And you can click on it. Let's see if that brings it up. Nope, and that's going to download it in a compressed file. That's a lot of work right now. I just want to see the version that's given to us. There we go. If I click on it, it's going to take us to the Google Documents, and it's not there. John, we need to fix this page. Ultimately, guys, it's going to bring up this spreadsheet. And the spreadsheet has 2 pages. The first page is going to be the copy of your tracking, guys. Every time you take a trade, every time you get into the market, this is going to give you a drop-down menu, and you're going to be able to talk about what you see, what you did. Let's just clear this up. You guys don't need all this. What type of trade was it? You're going to put a link. Hey, good morning. You're going to be able to go back and study that picture. How did you feel? Was it a trend trade? Was it a strong trigger? You know, was it all these things? And then finally, you're going to be able to put in what happened. And hopefully, it's going to be followed rules in one, which is great. But the reality is in the beginning, we're going to break some rules, guys, and you have to be okay with that. You're going to make mistakes. You're going to fumble every now and then. But if you go back and study this every morning, what using that spreadsheet is going to do for you, and I'll show you my picture here, is you're going to go back and you're going to study whatever you did yesterday. So yesterday, some of you were trading in determination conditions. Hopefully this morning you woke up and you began to look at the pictures from yesterday and you said to yourself, wow, I lost 4 trades in determination conditions. I need to focus today on not trading into those. I need to make sure that every time I'm getting into a trade, that is the big key factor that I'm looking for. This is going to bring me extra success. You're going to look at what worked. You're going to look at what didn't. And I think that number 3 is important. What felt easy? What was relaxed? You know, we saw a lot of trading yesterday with all the rules met, and a lot of people telling us, hey, man, this was easy, Mark. Like, there was no stress because I had all these advantages in place. And what you'll find is the trades that feel forced, the trades that make you anxious, that make your palms sweat, those are the trades where you're knowingly breaking the rules. You're hoping for a result that hasn't been proven over time. But that brief historical study each morning is going to prepare you for the day, and it's going to accelerate your learning. And that spreadsheet is going to feel like a chore in the beginning, but I want you to embrace the repetition of doing it every day. Take as many pictures as you can, save them over and over and over, and then as you learn the rules, every time you get a rules met trade, a rules met entry, my personal trade setups, guys, my spreadsheet, we are up to, oh my gosh, like 255 pictures of rules-based entries. So what I'm going to do is I'm going to drop my spreadsheet in the room for you guys. Steal it. Why start fresh, right? Let me give you 250 pictures that you can study over the weekend. 250 pictures of charts that are taken from the students in this room, following the rules, annotating their charts, taking the absolute best of the best, bringing themselves some success. And what you're going to find is when you click on these links, is that it's going to be a very consistent look all day long. It's going to be a look that you recognize, that you can line up with the rules, and that you can verify is in fact a trade. The trade that we talk about in the first hour is what we call the high probability trend trade. And I'm going to go to the tutorial section, guys, and I'm going to bring it right down to the glossary of common terms. This is a fun one to scroll through just to get a little bit on the language that we use in the room as well. But this high probability trade is going to be defined as a trade when each indicator on every chart agrees for the trade. And this is going to be when your triggers are the strongest. This is going to be when the path is clear, when there's nothing between you and your target. Guys, this is a trade that is compromised or comprised, excuse me, of three rules on only two charts, creating three advantages, giving you the best chance of success as a new user. And it's building a foundation. It's teaching you to read your charts, focusing this narrow focus in the beginning, focusing on this one high probability trade is going to give you a skill set that's going to take you to the next level and beyond. Because when you understand the rules of the trade, you're going to be able to look at your charts and you're going to have this fluent understanding of where the market is likely to continue. And you're going to use that area for entries for that highest probability trend trade. You're going to understand where the market is likely to go using Fibonacci, using momentum, the things that are applied in this high probability trend trade. And it's going to help you create a management plan ultimately that allows you to get the most out of each and every trade. And then finally, you're going to understand where the market is likely to stop. This is what we call a termination condition in the room. This is a termination condition because it may terminate the trend. If everything is going down and we reach one of these areas, well, that may be the point at where the market starts going up. These are the areas where the deep pockets react, where price reacts to Fibonacci, to one-to-ones, and you're going to be able to identify those likely to stop areas, and it's going to keep you safe. It's going to keep you from trading into those areas that may create a bounce. But the likely to stop areas, these termination conditions, as these are going to be the anchor for your highest probability trend trade. When we reach an area where the market is likely to stop and the market reverses, the first trend trade that you take after that, guys, that's your best of the best. That's a trade that typically wins 70 to 80% of the time. That's a trade that creates confidence through the memory of success, and it becomes easy to recognize through repetition, through going through things like this checklist and understanding what the looks look like. And that's what we're going to do for the first hour, guys. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. You're going to have it very clear what needs to happen for you to enter the market. And we're going to spend 20 days. Write this down on a piece of paper in front of you. We're going to spend 20 days, 30 days, 30 trading days, 20 trading days, whatever. And you're going to focus on your entries. You're going to focus on getting into the market at the correct spot. I don't want you worrying about being a professional trader in the first month. I don't want you worrying about what the wins and losses say in the first month. What I want you to do is focus on nothing more than the entries, because great entries create manageable trades, and great entries on a high probability trend trade create an opportunity to make money while you're still learning to read your indicators. And we're going to keep it mechanical and methodical so that you can do that. Your task is to simulate daily, to use that simulator. Don't sit on the sidelines waiting until you think you're an expert before you get in there in that simulated trading, trying to execute the rules. Because every time you simulate, you're learning something. Every time you simulate and take a picture, you're expanding that knowledge even more. And every time you take a picture and you annotate it, this is what I did, and this is why I got into the market, and these were the advantages that are present. What you're doing is you're validating those rules, you're verifying those rules, and you're creating confidence in the methodology. You're creating trust in a proven methodology that wins more than it loses, right? So simulate. Don't practice the wrong trades, practice the right trades. Someone said yesterday, and it was so true, practice doesn't make perfect. Perfect practice makes perfect. So focus on being a rules-based trader. We're going to simplify today. We're going to talk about the high probability trend trade first. And then we're going to add in what we call a medium probability trend trade. And we're going to do that after we establish the rules for the high probability trend trade, because your chart reading is going to be mandatory to get you into these medium probability trades. And these are going to be defined as a trade when most of your indicators line up for a trade, however a small issue exists. When you're comfortable reading your charts, you're going to be able to identify that small issue. This will probably it's probably going to be the vast majority of your trades, guys. You're going to take those high probability trend trades every time they set up because that's your path to success. You're going to begin to look at with your chart reading and kind of gauge these medium probability trades to make sure that it's a trade that you should be taking. You're going to be able to identify the problem through your chart reading. You're going to be able to identify your trouble spots through chart reading. You're going to be able to manage assertively through chart reading. So this is why I say it's imperative to learn that high probability trend trade first, because it's going to give you the skill set that you need to move beyond that trade. What looks will you commit to? I'm going to give you a written plan that you can follow as a new user that's very specific, not only on entries, but also on management. You're going to get that today. And you must learn the Fibonacci and trigger looks so that it becomes easy. Confidence through success, right? Recognition through repetition. 250 pictures of rules-based entries, most of them taken from you guys right here in this class. It's that repetition that's going to make it easy, which means that it can't be easy on day one, guys, and that's okay. It's a lot of information on day one. It's a lot of information on day two, but we're going to break it down individually. We're going to focus on the parts rather than the whole, and that simple, straightforward method is going to help you. And then this weekend and every day after class, guys, you can go back and you can replay the day. You can use market replay. It's going to allow you to trade the market as though it were live. So if I trade today on Friday, maybe tomorrow morning I wake up and I use market replay and I'm going to replay today. And I'm going to have the advantage of being able to pause the market, to look at my checklist, to make sure that the rules are met before I enter a trade. And I'm going to fix my mistakes from the day before. I'm going to fix my mistakes from the earlier day's trading. I'm going to skip the trades that I shouldn't have taken. I'm going to take the trades that fit the rules that maybe I skipped. And what's going to happen is your market replay is really going to show you the potential of what's possible when you get to that point where the looks become easy. It's a potential indicator. Then you're going to go back and you're going to take pictures of all those correct trades, and you're going to start filling that spreadsheet even more, and you're going to take 10 to 15 pictures a day, and that's going to put you at about 300 pictures over the course of your 30 days of study. And that 300 pictures, guys, is going to be monumental in creating recognition, and that's how these become easy. And just need you to repeat this process every day. Keep coming back to class. Keep asking questions. Keep posting charts. Keep filling up that spreadsheet. Keep doing your half of the study, and then I'll do my half of the study, and I'll make sure that I never leave you behind, that I answer every question, that I give you anything and everything that you need to be successful. As long as you're doing my part, I'm never going to stop doing my part, guys, and we will reach your goals together. And it's going to be fun. It's going to be an awesome journey. And you're going to look back in 30 days and you'll have no idea how you got so far so quickly. But it happened because you're following the path, right? So a high probability trend trade. We're going to talk about the rules. We're going to talk about the looks. John Novak's not going to post in class for the next hour while we talk about this, so you don't get distracted. But you'll notice that he labeled that picture chart reading. And chart reading is exactly what we're going to do, guys. We're going to read our charts, and we're going to recognize when the three rules are met, because the three rules for a high probability trend trade create three advantages. These advantages are outlined in yellow, and these yellow words are the recipe for a trade. A trade equals momentum, a clear path, and an entry area. Three simple concepts, guys, that you'll be able to recognize inside of the first week. Those three rules are going to happen on only two charts. Brand new users, don't give yourself the burden of looking at more charts than you need to look at. The average new user is only going to take information off the charts they want to take it off of anyway. So if we keep it at two, we can keep it focused. Your large chart is a broad stroke of a brush. Your large chart is where you are going to define direction, momentum, and areas. It's the general consensus of the market. It's what the market's opinion is, what the deep pockets investors, what the institutional traders believe should be happening in the market. Your first two rules, Jay Solar, I will address whether or not that's a PSO when we get to termination conditions, if that's cool. Rule number one, the advantage of momentum happens on a large chart. Rule number two, the advantage of a clear path. Pivot, stop out. The advantage of a clear path is going to come on that large chart as well. So when these advantages are in place, when 2/3, no, you're fine. Guys, always ask questions. But what happens is if I look at your question, typically I look at your charts after the first hour. But if you have a question about what I'm talking about, like Jay Solar just posted in there, what's a pivot stop out? and he's posting a picture in, and he's saying, hey, Mark, this is it. So, Jose, let's look at your picture real quick, just because I pulled it up. When we talk about termination conditions, you're right at a termination condition, right? Right at a line that may reverse the market. And then you're printing divergences all over, great recognition. But we don't trade potential. Divergence is or is not. So we're going to talk about that, Jose. That's going to be a lesson today, and that's going to help us out. But before we do that, let's get back to keeping it simple, right? Large chart, direction, momentum, areas. When we have the first two rules met, we're going to use a smaller, faster chart as a refinement tool. You're going to be able to take that broad stroke of a brush. What happens in the one bar that gives you those first two advantages, we're going to break it down into 15 to 30 bars on the smaller, faster chart. And this is how we're going to get that great entry, guys. And that great entry is going to reduce risk. That great entry is going to increase your profit potential. And that's rule number 3. It's taking these advantages and then finding an entry on a refinement chart. So this is going to be our focus for the first part of the morning here, guys. We're going to talk about these 3 rules. And the first rule says that we must have strong triggers on the large chart. So let's go through and let's go to the tutorial section. And we're going to go to those T3 trigger lines, trend defined, and we are going to look for the advantage of momentum. The T3 trigger lines are 2 parts. It's the small triggers, which are the solid lines, and it's the large triggers, which are those dashed lines. These two work together in a couple different ways. The first thing that they're going to do is if the small break above the large, it's going to define the trend as up. It's going to paint the background green, and it's going to let you know that you should only be looking for rules to be met for high probability trend trades long. If the small trigger lines break below the large trigger lines, it's going to paint that background red. It's going to let you know that you're in a downtrend, and it's going to keep you focused on only taking high probability trend trades in the direction of the trend. And one of the biggest advantages that you can give yourself is to never fight that trend, guys. Never go against what the big people are saying. The next thing that these trigger lines are going to do for you is they're going to work together, and they're going to provide rule number 1. And rule number 1 says that you must have strong trigger lines. So we're going to define them. When small trigger lines are crossed up, and they're above the large trigger lines that are crossed up in an uptrend with that green background, it's the space created between small and large that lets you know that the odds are favorable for the market to continue in the direction of the trend. This odds favorable momentum is the absolute best look for using a smaller chart to buy pullbacks to support. So when you have the separation, and I like the analogy, it's like scissors. When scissors are open, when they're wide, you're ready to cut, right? You're ready to do business. But when those trigger lines, or when those scissors close, when the two blades return to one another, when they overlap, and that is when the small trigger lines return to the large triggers, when they work their way inside of the large triggers, we call this the weakening of the large triggers. Anything can happen up or down. So this look, it becomes kind of a crapshoot, right? What are we going to do? Is it going to go up? Is it going to go down? I don't know, because there's no momentum to support it. When we have separation, when they're strong, when they're wide, when they're angled in the direction of the trend, whether it's an uptrend or a downtrend, this is the most favorable look for buying or selling a pullback right at that area inside of favorable large triggers on a smaller, faster chart. And you're going to see those pullbacks. They're going to look like tails on a large chart. They're going to look like wicks, whichever termination you prefer. We don't use the one bar on the large chart, but this is the refinement process on the small, getting you into that best of the best trade, continuing with the trend with the advantage of momentum. So guys, this is rule number 1. This is your look. This is the best of the best. We're going to knock it out into 2 different looks: odds favorable momentum or anything can happen triggers, right? Odds favorable, you're going to see it as OFM in the room quite a bit. Anything can happen. You're going to see it as ACH. And what you're going to do is you're going to have to be patient. You're going to have to be patient and wait for that advantage, because when the market comes down and you end up with those anything can happen triggers, notice that that's kind of the precursor to a reversal in the market, even without the benefit of Fibonacci right here. That reversal ultimately creates odds favorable momentum, and there's one of those tails, and it pushes up all the way to the point to where those triggers become weak again, to where we get back into that anything can happen scenario. Once again, there's a reversal after weak triggers, providing odds favorable momentum and a trip down to profit land, right? And then we get indecision. Then we get large that don't agree with the small. We get large and small that don't agree with the background color. Guys, this is when the deep pockets are fighting it out. This is when the people that move the market are fighting one another. Someone's trying to make it go up, someone's trying to make it go down, and neither of them are gaining any ground, any traction. You'll see this, and this is where a lot of traders get beat up in consolidation. This is where a lot of traders get caught in a range-bound market and get run over going both directions, typically in a short period of time. Next-gen users, you now have the advantage of insisting on odds favorable momentum, and it's going to keep you from trying to predict what the market's going to do. It's going to keep you from taking all these trades with no confirmation of momentum, and you can sit on your hands and just wait for the best of the best and have that advantage of a market that's likely to continue in the direction of the trend. So I love to ask my new people, guys. I'm going to do it. Don't be shy. It's Friday. Give me all capital letters. Are we good with odds favorable momentum? That idea that when there's separation between the small and the large, the advantage is present. We now have the advantage of momentum. We have a market that is likely to push in the direction of the trend. We have a look that is the absolute most favorable for buying or selling a pullback at an area on the smaller, faster chart. I'm telling you guys, odds favorable momentum hides an awful lot of mistakes that you can make. And once you have it, we need to make sure we have a clear path. That's rule number 2 on that large chart. Rule number 2, love it, Derek. That's what I'm talking about. Termination conditions false. Rooms to the profit targets are true. Guys, that's your clear path. That's that nothing in the way. That's you on the Autobahn at 120 heading towards Germany, right? Nothing's going to slow you down because of the momentum. Nothing's in the way. And we're going to identify those termination conditions real quick. We're going to go back to the tutorial. You know what? It's not slow and steady, and your name says it all. It's not elusive, but it's not natural, right? It's not second nature. These are all concepts that are new to you. Let yourself be new. And we'll get you where you need to be. I've had people tell me, man, Mark, it's like reading Chinese. And these are people that don't read Chinese. It's like reading a totally different language. It's like being immersed in something brand new. Well, it is, right? My first day of Spanish class, I didn't know a thing, and it was overwhelming. But by the end of the first semester, I could talk, I could speak Spanish like a 4-year-old. And that's kind of what we're doing, guys. We're building that foundation. We're learning the basics, and we're only focusing on momentum right now, being able to identify it. So let's go to the large charts real quick, and let's take everything off. All the noise goes away. Nothing but triggers. And guys, you can do this yourself too. And you'll see just how easy it is to recognize when you have odds favorable momentum. There was a small little spot where the market traded outside, or the smalls got outside of the large. And then there's a pretty clear one, right? There's one of those tails, odds favorable. You can scroll back 10 days. How many times did you have odds favorable momentum and that market continued in the direction of the trend? When things began to weaken, did it end up reversing a little bit? It sure did. And right back to that odds favorable, right back to that potential pullback. Paul, you took one of these last night. Probably that one right there, maybe right here. With odds favorable momentum, you took a pullback on a smaller, faster chart and made some money. Nice job. So slow and steady, your first job is just to go back and look for that odds favorable. And if you see it, there's your study tool, guys. If you see odds favorable momentum in one of those tails, start circling them. Because we know that these are potential entries if the rules are met. And you can go back and you can do that. And have we had them today? We have. Keeping it simple, keeping it slow, right? looking for the advantages, and when the advantages happen, jumping in, taking advantage. There's another little one right there. I don't know if these were trades yet, but they certainly had the potential to be. So I'm going to leave my circles. Is everybody good with that? When you have odds favorable momentum, look for the tails. You don't have to look for anything else. We're learning to study right now. So when that odds favorable momentum is in place, we're going to make sure that we don't have a termination condition. And a termination condition is a Fibonacci-based indicator that may reverse the market. And I want you to notice that may is in a different color. May is underlined. There are no guarantees in trading. What we're doing is we're creating a statistical advantage. So if we reach an area that may reverse the market, well, then it takes away our advantage of a clear path. In the areas that may reverse the market, guys, they're pretty easy to recognize. You're going to see them all day, every day. Red Fibonacci resistance if the market is trending up. Blue Fibonacci support if the market is trending down, right? Yellow 1-to-1s. And then we also have these divergence high and divergence low lines. Divergence simply means loss of momentum. If a pivot is created and this line prints, there's a loss of momentum. If the buyers were moving up and it creates a pivot, the sellers stole their momentum. The buyers stole the momentum from the sellers, and that's all that that line means. But we're going to use these to determine whether or not that market may turn. So let me give you this. If you're new in the room, oh, I already gave it to you. If you're new in the room, that's a great key to what you're looking at every time you open up your indicators. So how do we know if we've reached an area that may reverse the market? Well, it's a pretty easy recipe. And this is another one of those things that I want you to listen to the words because the words are so important. The first thing that must happen is price reaches an area. These dynamic Renko bars, they come down and they reach Fibonacci support. When price reaches an area, the only thing that you have to do, guys, keep it simple, is ask yourself, where are my trigger lines? And if they remain above support, support may reverse the market. Support may create a bounce. So no more short trades into this area that may reverse the market. We have a termination condition. And then here's that pivot stop out answer. Price comes down, the triggers begin to exceed the area, and we get a pivot from small to up, right? Or from down to up. This pivot has a loss of momentum, and we can identify that loss of momentum through the cyan line that prints. These divergence lows are not termination conditions on their own, especially if it's not happening in an area. This is just a loss of momentum. But when price comes back and price reaches the area, right here, Safia, where are my triggers? Price reaches the line, where are my triggers? My triggers remain above. No more short trades, guys. This is your indication that this line in the sand, this divergence low, may stop the market. Notice that price exceeds a little bit and then it heads the other way. We call this a pivot stop out. Here's your pivot. The stop out means that the buyers stole momentum, right? And they pushed it up just a little bit, and they let the sellers think that they won again, and the sellers start pushing down right to this line in the sand. And when they reach it and exceed it just a little bit, the buyers stop them out. They take all the sellers' money and they rocket that thing the other direction. So this line is a line in the sand, and when you reach it and the triggers don't cross, now it becomes a termination condition. Now it's one of those pivot stop outs. And you'll see it from a high as well. Price reaches resistance. Absolutely none of the trigger lines break through. Where are my triggers? They're below, therefore no more long trades. And the market pushes all the way back down to support. Where are my triggers? They remain above, therefore no short trades. 90% of your day will be spent reading your charts. 90% will be looking at your indicators and waiting for these advantages. 10% is going to be jumping in, getting in because the advantages are met. Price pulls all the way back up to resistance, and there's that divergence high, right? It exceeds it a little bit, and heads the other direction, all of the trigger lines remain below. Now we have a pivot stop out of a divergence high. Pivot stop outs are great termination conditions. Pivot stop outs that happen right at Fibonacci are amazing. It adds power to the top, guys. So embrace that recipe. Price reaches an area of support. Where are my triggers? My triggers remain above, even though my triggers are odds favorable momentum, because price reaches the area and absolutely no trigger lines break through. I'm not looking for any trades into this area of support. It becomes a termination condition. So guys, this is kind of the recipe. When is a termination condition present? Let me bring up another picture here. There we go. Sorry, I was like, I couldn't find my picture. So going into highs, if the market is trending up, here's our first pivot. It has that divergence, right? This is a slowdown. It's a loss of momentum. It's a line in the sand created by the sellers. This on its own is not a termination condition because remember the first part is price reaches an area. So when price comes back, the dynamic Renko bars come back to the area. None of the trigger lines are capable of getting through that area. Therefore, we now have a termination. We have that pivot stop out. And guys, any termination condition from a high that creates a full reversal, that has those large triggers going from green to red, gets those small triggers below it, provides that odds favorable momentum. This is a termination that creates a full reversal. We're going to shorten all those words and we're going to call it a good top. We're going to call it a strong top. And a strong top is the precursor for the highest probability trend trade short that you can take. A high probability trend trade that happens after that good top, guys, that's the best of the best. That's that 70 to 80% winner. Price reaches Fibonacci resistance. All you have to do is ask yourself, where are my triggers? All of the trigger lines remain below the area of resistance. It is a termination condition. No more long trades into that area. Price reaches one-to-ones and resistance and your trigger lines don't break through. Absolutely no trades into that area, guys. This is your safeguard. This may create a reversal. It may create a bounce that's untradeable. And the recipe is the same going into a low area. Price reaches one-to-ones. Absolutely no trigger lines break through. It's a termination condition. When that termination condition creates a full reversal, provides me odds favorable momentum, now we have what we call a strong bottom, a good bottom. That's the precursor for that highest probability trend trade, that odds favorable, that clear path that happens after a termination condition. Guys, that's the best of the best. Termination condition, price reaches, triggers remain above, creates a full reversal. You see we're red to green to odds favorable. There's one of those tails, that best chance of success. Once again, there's a pivot, loss of momentum, not a termination condition. That loss of momentum creates a line in the sand, and when price reaches that line, the trigger lines remain above. Now we have a termination condition, and if that termination condition creates a full reversal, we have a strong bottom. We have a good bottom, and we have that precursor to the highest probability trend trade that we take. Guys, is everybody comfortable with the concept? Keep it simple. Price reaches, where are my triggers? That's all you need to identify a termination condition. Areas break, right? The path can clear. Even if it's a termination condition in the moment, it might ultimately not be a termination condition. We consider the path to be clear when both your small and your large triggers break beyond the area. Notice that I didn't say when price breaks beyond the area. When your small triggers and your large triggers get to the other side of resistance, it now acts as support. That path is now clear. There's one of those tails with that odds favorable momentum, guys. Fibonacci resistance, Fibonacci support, one-to-ones. When you reach them, the triggers remain below or above, no trade, right? Not a clear path. Rule number 2 not met. Just sit on your hands. Let's see what happens. When the small and the large break to the other side, that path is clear, and if the momentum is there, Let's look for the rules to be met for high probability trend trades, guys. And I want you to ask yourself, you guys that are working through some stuff, what if you never traded into a termination condition? What if you always committed to a clear path? Would it make a difference in your trading? Would it remove some of those losers? Would it allow your winners to stay green in the P&L or black in the P&L? I think what you'll find is that they will. Is everybody comfortable with this? I know that it's a lot on day one, right? Slow and steady. But we're doing this cyclical. We're doing this foundational. We're taking our approach and we're just embracing a path. We're good with the trend, everybody, right? If it's green, it's up. If it's red, it's down. That's the first step. That's the first bite of eating this giant elephant that is day trading. And then once we identify the trend, we're going to see if we have strong triggers with the trend. That's rule number one. That's the advantage of momentum. When we get comfortable and confident with identifying momentum, guys, now we're going to make sure that the path is clear. Now we're going to make sure that we haven't reached an area that may stop the market. And guys, if you're not great on identifying the trend, don't go to the trigger lines yet. Most of you are pretty good at this in the first 4 or 5 seconds, right? And then those trigger lines become easy to recognize. So you're going to scroll back and you're going to look for it. And you're just going to say to yourself, this is the look. This is what I'm looking for. And again, this is going to take you maybe 5 to 10 minutes to really be good with the look. And then we're going to start working on those termination conditions. And you're going to have to do the exact same thing. You're going to go to your large chart, right? And you're going to take a circling tool or a square tool, the rectangle. And you're going to say, I noticed right here that price reached support and absolutely no trigger lines break through. And I know that this is a termination condition based on the rules. And then you're going to take another rectangle and you're going to go, and here it reached resistance and absolutely none of the trigger lines broke through. And I know that this is a termination condition based on the rules. And if you're not sure, you're going to take a picture and you're going to draw arrows to these boxes and you're going to write on your chart. You guys, this is how this classroom works. Hey, Mark, I think these are termination conditions. Am I right? And just take that picture, copy it, drop it in the room, and say, hey, Mark, my focus right now is termination conditions, and I'm scrolling back and I'm trying to identify them, and I just want to make sure that I'm doing it correct. Is this right? And I'm going to say, hey, you know what, Tam? Absolutely, you're doing great. You know what, Slow and Steady? You nailed it. And I'm going to say, hey, don't forget that it works on the retracements too. When price pulls back to support and all the trigger lines remain above, that support's likely to hold in the direction of the trend. And look how often it happens. And look where it happens on resistance. And this is going to create opportunities for you as well. So we're going to have that talk every day and we're going to look at it. Those divergence highs, Fibonacci support, right? Fibonacci support. And you're going to be amazed at just how much these lines tend to hold the market. And you're going to be able to use those momentum indicators coupled with these clear paths to know that it's time to look for an entry, right? And you know that it's time to look for an entry by circling these tails. And we're going to refine that process and we're going to bring it down to a smaller, faster chart to see if they were in fact entries. So guys, termination conditions give you the advantage of a clear path, right? And it involves on the large chart recognition of an area and where the trigger lines are. But sometimes the market's going to turn. Sometimes it's going to have odds favorable momentum and a clear path, and that market's going to turn. And this final termination condition that I share with you guys, this is a termination condition that you're going to see on a smaller, faster chart first. You're going to see this, and it's going to help you see change that you won't recognize on that broad stroke of a brush. And it's 3 divergences, 3 losses of momentum in the same price range. It may terminate the trend. There's that key word may once again. It may terminate the trend. And this is a very powerful condition when the small triggers happen to be inside of the large triggers at the time of the third divergence. Remember that we had that odds favorable momentum, that small outside of the large are wide, they're angled down. That market has momentum on a smaller, faster chart too. 3 divergences, 3 losses of momentum. Notice that the triggers go to anything can happen. It makes it more powerful. It's more powerful still when that 3rd divergence from a low is higher than the previous or lower than the previous from a high. And these looks at lows and these looks at highs are what you're going to see on the smaller, faster chart when that larger chart may be changing direction, guys. And this is the only termination condition that I'll use a smaller chart for. Your ability to read your indicators is going to have you identifying this, and you're also going to use those 3 divergences to help you manage out of trades. We know that medium probability trades have to be managed assertively, which means that you can use divergence to manage assertively. If you're in a short position, you can use 3 divergences to manage out of that position. It all goes back to chart reading, but these 3 divergences on the smaller chart are just going to give you an indication of change happening before you're able to see it on the large chart. And again, that's one of those things that you can just kind of scroll through, right? 3 divergences may terminate the trend, not guaranteed to do it, but you can see these moments of indecision with the losses of momentum. Divergence can slow, divergence can push back. 3 divergences in the same price range may create that push up, right? There's that keyword may. But what it does is it keeps you from looking for opportunities when the market says that it may push down a little bit lower. So we have momentum and we have a clear path. And now we need to refine, guys. Now we need to go to that smaller, faster chart to recognize that area where the market is likely to continue, to give ourselves the advantage of an entry area. We've used the large chart to define areas. We've used the large chart to define direction. And the large chart reflects the large opinions of the market, right? That big crowd mentality. And the large chart typically wins more than it loses, which is why we don't fight trend, which is why we don't fight momentum. These tails on the large chart are potential pullbacks on a smaller, faster chart. When the large chart says up, there's always a group in the small crowd, a bunch of yahoos that want to fight the trend, that want to fight momentum. And they're going to get us to that point where the market is likely to continue. They're going to give us a little retracement in price, counter to the underlying trend, so that we can get into the area where it's most likely to continue. And rule number 3 says that we're going to use a limit order to buy or sell a pullback, that small retracement in price. And we're going to do it at an area. Areas can be Fibonacci support or resistance, mid bands, or yellow 1-to-1s. And we're going to insist that those areas are inside of favorable large triggers. And favorable large triggers, I'm going to give you a picture. Favorable large triggers means that your large triggers and your synthetic triggers are trending one on top of the other. It means that the smooth large triggers that are native to the 5-1 and the synthetic, the ones with the steps on them, those are just the large triggers from your larger chart. When these are one on top of the other, overlapping, we call this favorable large triggers. They should be wide. They should be angled in the direction of the trend. We're going to buy or sell areas inside of them. So these favorable large triggers are going to give us the absolute smallest window of opportunity. They're going to give us the best chance to reduce risk and the best chance to increase profit potential. So when everything says up on your large chart, when everything is clear path on your large chart, we're making the decision that it's time to enter the market. Those advantages are in place. Let's refine it. Let's get in. Let's make some money, right? You should have strong triggers on your small chart. Your large and your synthetic should be wide. They should be up. They should be angled in the direction of the trend. And all you're going to do is you're going to identify where are the areas that are starting to fall into line with these large triggers that are up and strong. Fibonacci support, green midband, yellow 1-to-1s. But the magic really happens when the pullback begins. When this reversal bar prints on the smaller, faster chart, that's that fighting of the overall trend that those small crowds are doing. We're going to identify the window of opportunity. And for a long trade, your window of opportunity is going to extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. For a short trade, going short in a downtrend, it's going to extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Next-gen users, my rule followers, your job is to right-click on a chart right at the top of that window and wait for the market to come to you. Here's that same picture, but I've marked it up a little bit. From the top of your triggers to the bottom of your triggers, identifying the areas that fall inside, from the highest point of support to the lowest point of support. Guys, this shaded area is your window of opportunity. The shaded area is the place where the market is most likely to continue. This is your entry for the high probability trend trade because of the momentum. Because of the clear path, you're going to get in with a limit order at the top of this window. This is the point where the market is likely to continue. This is the advantage that your third rule provides. As the market comes down and reaches the top of that window, you're now in a trade because of momentum, because of a clear path, because of the window of opportunity. Every time you enter at the top of the window, I want you to be mentally prepared that it may go to the bottom of the window, guys. It's a window. We're good, but we're not to the tick good every time. So it may go from the mid band, it may go from the first area of support, the second area of support, or even from those one-to-ones. New users are going to be tempted to put their entry at the bottom of the window, but remember that your large chart has screaming in the direction of the trend momentum, guys. We're expecting the top of the window, but we're prepared for the bottom mentally. And then your protective stop is going to go just beyond that window of opportunity where the market shouldn't go, because if it goes down beyond that window, we don't want to be in that trade anymore. We've lost the advantage of an entry area, and I'm going to tell you right now, you will take losses because losses are a normal part of a positive equity curve. And in order for you to win 70 to 80% of the time, mathematically, you have to lose 20 to 30. You don't get to pick when it happens. This is why we protect ourselves. But I'm telling you right now, guys, because of the advantages, because of the momentum, because of the clear path, because of the refinement process that gets me in at the absolute best of the best spot, this is a trade that I refuse to miss. This is a trade that I focus on for my first 20 days because it has me reading my indicators. It provides me these advantages. This is a trade that 70-80% of the time typically makes it to its profit target. Absolutely. TJ, second hour, we're going to go through it. We're going to talk about everything. Thank you for posting in the room. Because we wait for the pullback to the area inside of favorable large triggers, once we get a reversal bar in the direction of the trend, I'm going to reduce my risk below that reversal bar. Guys, it's not uncommon to see people taking trades with 2 or 3 ticks risk. Because we waited for the pullback to the area inside of favorable large triggers, our profit potential is increased. We have more room to get to our target. So we're going to study every day. We went back and we circled tails, right? When we had odds favorable momentum, we circled the tail. If there's a clear path and we circle the tail and that tail lines up with an area of support inside of favorable large triggers for a long, or an area of resistance inside of favorable large triggers for a short, we know that we have a rules-based trade, and this is a trade that typically wins 70 to 80% of the time. This is a trade that very often creates an opportunity for quick profits, even if it doesn't work. But this is your recipe for success, guys. Three advantages, one trade, absolute best of the best. Is everybody good with me so far? We have circles, right? We have odds favorable momentum. Sometimes it pulls back to the area, sometimes it doesn't make it, and that's just not our trade. And if we scroll back and look at these circles, well, there's a pullback directly to that area of resistance right at those large triggers, and it continues down to Fibonacci support. You can scroll back and look at this look over and over every day. What do these pullbacks look like? Are they coming to areas? Are they inside of favorable large triggers? Take those pictures, post them in the room, ask your questions. And repetition is going to be the key to success, guys. And I'm going to make it as easy as possible. 3 rules. Bradford, great question. You ready for the answer? Because your 13-2 chart is a different time frame. Your 13-2 chart, so 1-to-1s. Let's go into it technically too. I'm going to go to the glossary of common terms, and I'm going to show you why. Guys, this happens a lot. This is why we use one chart for overall and one chart for entry, because 1-to-1s are a calculation of the swings on whatever chart you're looking at. So if I'm looking at a 13-2 chart, these 1-to-1s are being measured from 13-2 swings. If I'm looking at a 5-1 chart, these 1-to-1s are being measured from small chart swings. So Bradford, this is one of the reasons why we use the large chart to define areas, and we use the large chart or the small chart to define entries, because 1-to-1s on a large chart might be a termination condition, right? On a small chart, they might be an area for entry. But you're going to see them different. You're also going to notice that the divergences are different. And honestly, you're going to see that the Fibonacci areas are different as well, because they're based on calculations from different time frames. It's going to create a different look on either chart, and that's one of the reasons why it's so important to embrace the idea that the large chart defines those areas. Otherwise, you're going to get scared out of a lot of trades by looking at those areas on the smaller, faster chart, where you should be using them for entries instead of terminations. Does that make sense? It's a great question. Awesome. I like questions like that, right? There's that little bit of clarity. Took just a second. Hey, Scotty Otten. Welcome to the classroom. Test coming through. So guys, you're going to study your high probability trend trade. You're going to take a few days. You're going to work on your entries. You're going to make sure that you can follow these rules. And I'm going to give you a checklist. And this checklist is nothing more than something that you can print out. You can put it on your desktop. You can grab your biggest crayon in the box. And every time you take a trade, make sure that you're following these rules. Make sure that you have the advantage of momentum. Make sure that you have the advantage of a clear path. Make sure that you've got the absolute best of the best, right? So I'm going to put this in the room right now, guys. Download it. Click and drag it over to your desktop. This is yours. Print it out. Use it every day, guys. Give yourself these advantages, because when you're following this checklist and you get yeses on every one of these, that strong top or bottom, and there's a video for the weekend, guys. I'm going to give you a whole video list for the weekend, but there's a video about good tops or bottoms, being able to recognize them. And then you have those advantages in place that you get from the large and small charts, guys. I've never had anybody follow this plan and do worse than 70% winners. And I have a lot of people that stray from this plan and then come back and they tell me, you know what, Mark, I simplified. I made it easy, and now I'm finding success. I'm also going to give you the exact same checklist, but I liberated pictures from the study materials to show you exactly what each rule looks like, what it means, what you're looking for visually, representation of it. Guys, this is for your computer. This is a great 3-minute study every morning before you get into the day and before you get going. And then finally, I'm going to give you the absolute most basic, simple plan for consistency. For you brand new users, I'm going to provide you a written plan, something that you can follow to give you the best chance of success. And you're defining your trade. You're not defining Nexgen's trade. You're not defining Paul's trade or John's trade or Geo's trade, right? You're defining your trade. Tam, your trade is going to be the high probability trend trade. And in order to enter that trade, these conditions must be met for you, right? The only thing you're in control of is whether or not your rules are met. So guys, if you keep it mechanical and methodical in the beginning, if you focus on that absolute best of the best, thanks for that, Ron. High impact news in 2 minutes, guys. Then you know that you've increased your chances for success. You know that what you've been able to do is have those advantages in place. And Scotty, awesome. Nice job. Keep those pictures coming for the next 30 days. I want to see them each and every day. This is your plan to stay focused. This is your plan to build a trading plan capable of winning while you learn to read your indicators, guys. And notice that it starts with never fight the large chart direction. Never fight the large chart triggers. This is going to keep you on the right side of things more often than not. You're going to define your entry point. You're going to use that checklist, those 3 rules, those 3 advantages to do it. And every time these rules are met, you're going to enter the market. You're going to take that trade and you're going to write these rules on your chart. You're going to say, hey, Mark, I took this trade. I had odds favorable momentum and I had no termination conditions. So I identified the area inside of the large triggers and I took it all the way up to my target. Guys, your annotation is key. Your annotation is going to give me the best opportunity to give you the greatest feedback that I know how to give. Once you focus on these entries, once you get comfortable with these entries, once these entries become easy because you've done the study, all the repetition, guys, every trade needs to be managed, right? Every time you get in, there has to be some sort of management in place. So I've created and given you on this very simple path the most mechanical, methodical. It's opinion free, right? It's hope free. It's simply if then. In your mechanical management, guys, this is going to take all the emotion out of it for you. You're going to take your best entry because great entries create manageable trades. Your initial stop is going to go outside of that window of opportunity. And at this point, when you've entered the market with all of the advantages in place, one of two things are going to happen. It's either going to reach your stop, the market's going to take one of those 20% losers. It's a cost of doing business. You just paid rent on your storefront. Or it's going to start going in the direction of the trend. And if it provides that reversal bar, you're going to reduce your risk. You're going to go a tick or two above that reversal bar. The market's already doing what it said it's going to do. And now your risk is drastically reduced, right? And you're at that do nothing point. I'm either stopped out of the trade for a small loss. That's okay. It's going to happen. You're going to mentally be okay with it because you're going to embrace the advantages in place to get into this trade. Or you're going to hit your first target, and your first target is a simple $100. And if it reaches that first target, there's $100 in the bank, guys. It's back in your account. It's a dopamine kick. They can't take that from you. That's your money now. Whether it's simulated or live, that's your money. And once you hit that $100, you can move your stop. And once that stop is break even, you have nothing to lose, right? It becomes easier to see if it hits that second target. Sometimes it's just going to come up and it's going to tap that break even, and you're only going to make $100 on that trade, guys, right? And you're going to say, do you do all this for $100? Well, if you do that $100 3 times a day, super simple, all the advantages, quick profits. Guys, that's a $1,500 week, right? That's a $6,000 month. That's $72,000 a year from 3 trades that never made it to the second target. That's not so bad, right? Put that $72,000 on a 10 lot, and it's almost $750,000 from the exact same trade that never makes it to its second target. But with all those advantages in place, you're going to find yourself reaching that second target, hitting that $300, right? $300 is a pretty good trade, right? You had the advantage of momentum, you had the advantage of a clear path, you had the advantage of an entry where the market is most likely to continue. You protected yourself where the market shouldn't go. You reduced that risk and still stayed protected as it began to do what it was going to do. You cashed out quickly, you got your risk to zero, and then ultimately that simple trade was a $300 winner. And guys, you're going to see $300 winners a lot. And as you grow with the software, as your education improves, as your ability to read charts improves, you're going to be able to take those great entries, right? And you're going to begin to grow. You're going to go from mechanical, pragmatic exits, and you're going to say, I still have the rules met and I still have the best entry, but now because of the momentum on my large chart, I'm going to hold that last contract. I'm going to let it get a little bit more. I'm still going to get it paid quick, but my conditions tell me that there was a lot more to be made because of the momentum, because of the clear path. So every great entry becomes an opportunity to expand your management plan, guys. And we're going to talk about that in the classroom too. We're going to focus on entries first. We're going to make sure that what you're looking at is the best of the best, that it's providing these advantages. And then as you grow with the software, you and I are going to work together to help you learn how to manage these great trades, these great entries. And that's your high probability trend trade, guys. That's the absolute best of the best. That's the one where everything on every chart agrees for the trade. Strongest triggers, clear path, entry area. It only takes 2 charts to do it. It only takes 3 rules to make it happen. And it's something that repeats itself every day, and it repeats itself on every market. I don't care if you're trading NASDAQ, if you're trading gold, if you're trading crude oil. When you have odds favorable momentum and no termination conditions, you're going to get pullbacks to areas inside of favorable large triggers. You're going to be able to see these circles. Oh, I rectangled it. And there's your pullback right to the area inside of favorable large triggers. And guys, this was an easy $300 winner until 3 divergences print, and it changes the scenario. And you don't take this one, but you're not worried about it because you've just caught the best of the best and you got paid. If you got in at 66, your $300 was realized right here at 46, right at the bottom of that move. And you're halfway to your daily goal. Guys, go through and study it. And if it's a termination that creates a full reversal that provides odds favorable, the likelihood of this trade winning goes up exponentially. All you need to do is study it a little bit. New users, would you like to do a bar by bar scenario? Whoops. Would you like to find that entry, that window of opportunity together using 2 charts? Nobody wants to? Bradford wants to. Cool. You guys worried me for a second. It's amazing that I've got 52 experts in here. So let's start at where we're coming from, right? Termination condition creates a full reversal, right? We go from green to red. We go from green to red. We go to odds favorable. And now everything says down with odds favorable momentum. You guys see it? Small's below the large are wide. They're angled in the direction of the trend. Everything is beautiful here. And price has not reached an area, therefore, we have a clear path. And let's talk about that for a second. We have one-to-ones off in the distance. But in order for these one-to-ones to be anything more than a target, price has to reach them. So not a termination condition, it's a target. Everything says down. We haven't reached an area. So we're going to look over here on our smaller, faster chart. And everything says down again. All of my price bars are down. My smalls are outside of the large, and my large and synthetic are working their way down. The only area that I see right now is Fibonacci, is this midband, the only potential spot inside of favorable large triggers. But remember, we're going to let that market trend down, and we're going to wait for a reversal bar. We've reached one-to-ones on the small chart. Guys, is it a termination condition? Or are we defining termination conditions on the large chart? Don't let a couple yellow dots on a smaller, faster refinement chart scare you out of a trade. The market continues down even more. And you're like, oh my gosh, it's going without me. This stinks. Your fear of missing out begins to kick in. And then we get a reversal bar. And at the time of this reversal bar, I'm going to identify my window of opportunity, guys, from the lowest point of the large triggers to the highest point. And this becomes the area where I'm looking for those areas of resistance. And the only area of resistance that I have is a midband. So I'm going to activate a limit order a couple ticks below that midband, because as price pulls back up, this midband's going down. It's a moving average. And this becomes the area where the market is most likely to continue. Guys, give me a Y in the room if you're with me so far. We had momentum. We had a clear path. We waited for our reversal bar, and we identify the window of opportunity, and we activate that limit order, and we wait. And the market comes up, and my palms start to sweat, and the market keeps coming up. And I'm getting nervous. Is it going to fill me? And here it comes again and again. And look at how that midband works its way down as price pulls up. Guys, it's okay. Don't trip over pennies. Give it a couple ticks, give it a little breathing room, and that market continues up, and boom, and I'm now in the market. And I'm in at 76.66 with the advantage of momentum. And I'm in at 76.66 with the advantage of a clear path and having waited for the area inside of favorable large triggers. And that point where the market shouldn't go is about 10 ticks in the distance. So let's put a stop in place. My stop is in place, right? Where the market shouldn't go. My entry is at the area inside of favorable large triggers. Let's put in our profit targets. Let's put in $100. So that means at 56, it's $100 profit. Let me scroll this up a little bit. And down here at 46, this is crude oil. At 46 is $200 profit. And let's make it the color of money. What do you say? We'll make it spring green. So once again, guys, I'm going to ask you as we follow along, as we go through this step by step, is everybody comfortable with where we're at so far? The large chart defined momentum. The large chart defined direction. The large chart defined the areas. And the small chart was nothing more than a refinement process, a way to get into this market to take advantage of the rules being met. Our stops in place, our targets in place, and that bar goes up again against us. Our P&L's red now, guys. And now we're a little nervous. Oh my gosh, is this going to win or lose? And you're going to say to yourself, I don't care. I don't care if it wins or loses. Do you know why? Because I have a statistical advantage, because I have momentum, I have a clear path, I have an entry area, and I know that this is a trade that typically wins 70 to 80% of the time. And I'm just either going to get stopped out of it or I'm going to wait for a reversal bar. Oh my gosh, look at that. It's 4 ticks against you, 5 ticks against you, 6 ticks against you, still inside those large triggers, still in that window, 7 ticks against you. Oh, there's a reversal bar. This is a methodology that's been proven over time, guys. I don't get nervous. The reversal bar is at 74. I'm going to keep my risk 2 ticks above it. But now it's going in the direction of my trade, right? It entered inside of the window of opportunity. I have a reversal bar. It's doing what it's supposed to do. My risk is in place and there's nothing to do. I either reach my first target. I don't care about these one-to-ones. They gave me a bounce back to my entry. I'm looking for 56, guys. That's all I need to get paid. Look at that fluctuation on a smaller, faster chart. This is going to scare some of you guys out of a trade. Guys, remember, the advantage of momentum is on the large chart. The advantage of a clear path is on the large chart. Don't let these 3-tick, 4-tick fluctuations on a small chart scare you out of a trade. The advantages happen here. This is just your entry. One more bar, and there we go. Profit target reached. Guys, congratulations. You have $100 in the bank. Nobody's going to take that from you. And now you have zero risk on a trade. You have absolutely nothing to lose as you wait to see if this momentum and clear path take you down to $200. And down it goes, down it goes, down it goes, and boom, right to the tick, $300 in the bank. Guys, this is your high probability trend trade. This is the trade with all the advantages. This is the trade that you're going to study for 20 days. This is the trade that's going to set you up for success as you learn the software to keep you focused. And if I circle that tail, it lines up with an area of resistance inside of favorable large triggers. This is the trade that you need to grab that TechSmith capture, that you need to get your snag it and take this picture, right? And use that call out button and identify everything that you see from your checklist. Term creates reversal, good top, right? Where am I coming from? Use the arrows if you need to. Odds favorable momentum, clear path, right? The advantages keep stacking. And then this is one that I think is so important. Guys, use the language for rule number 3. Area inside of favorable large triggers for entry. Guys, this is your best of the best. For those of you that have Snagit, you can just take a picture of your checklist. Watch this. Get up there. And you can click and drag that checklist directly onto your chart. Good top, odds favorable, clear path. There's my entry. I know I've policed myself. I know this is the best entry. Once I have it, I'm going to copy it. I'm going to put it in the room, and I'm going to wait. And I'm going to wait for Mark. That's me. I'm going to wait for Mark to say, hey, you know what? Absolutely. You killed it. You did such a great job here. That's your high probability trend trade. That's the absolute best of the best. That's the one that's going to give you what you need to get to where you want to be. And then I want you to upload it to Screencast. And Screencast puts it into a virtual cloud. Guys, you can do it from TechSmith Capture. You can do it from Snagit. It's going to provide you a link. You're going to put that link in the room. And when you put that link in the room, you're going to go to your spreadsheet. You're going to put it in there. What about that trigger that looks like square-edged? So Bradford, great question. Remember when we talked about entries, we said that your entries come from the area inside of favorable large triggers. The square edge trigger is your 13-2 large trigger, Bradford. We call it the synthetic triggers. And it's synthetic because it's pulled from a different time frame. So this large trigger here is this stepped, this edged trigger, and we've transposed it over onto the small one, onto the smaller chart, because when the small one large trigger and that 13-2 large trigger work together, one on top of the other, really tight, this creates the advantage of favorable large triggers. This is when that window of opportunity is going to be its absolute smallest. This is when your risk is going to be its absolute least. So we let those two work together, and what it does is it means that everything is in sync and it creates an advantage. And if you get in the habit of searching for your areas inside, it makes it a little easier. And the other side of that is when you have them split one apart from each other. Let me find the picture that I have on the split triggers. What happens when those trigger lines are split, when the large and the synthetic don't work together, it can create a huge window of opportunity. It creates this question of, is it going to stop at the large triggers, or is it going to go all the way back to those synthetic triggers, which means that your risk grows exponentially, right? It means that you've got to put a risk all the way down here below those triggers. So focusing on the best of the best in the beginning, guys, is going to keep it simplified. It's going to keep it concise. It's going to keep your risk down. Ultimately, as you grow with the software, you may find trades where you're very comfortable trading with a split look. But if you let it be odds favorable, those favorable large triggers first, it creates a great advantage. Does that make sense, Bradford? It's all part of the process of giving you as many advantages as possible. Absolutely. Keep those questions coming. They're great questions. There's odds favorable, right? There's a clear path. There's resistance right inside of favorable large triggers. And we'll see what happens here. This one right here worked nicely. We'll see if that momentum carries it down. Notice that we already have 2 losses of momentum. A third loss of momentum may change the look. Whoa, NASDAQ all over the place. Odds favorable. Clear path. Oh my goodness, guys. Look at that pullback to the area inside of favorable large triggers. That just happened on the NASDAQ. All you have to do is study this enough to be comfortable with it, guys. We've talked about how to study it. You've got your checklist. The only thing I need you to do is repeat the process over and over and over again. And while you contemplate process repeating, guys, I'm going to take a quick break. I'm going to take 5 minutes, stretch my legs, drink some water. If you have a question, post it in the room. If you have a chart to share, post it in the room. I'm going to come back. The second hour and beyond is all about you guys. I'm going to start clicking on the charts that you've posted. If you have a question about anybody's chart, it doesn't have to be yours. I want you to ask it in the room. We're going to talk about advantages. We're going to talk about the best of the best looks. We're going to talk about management. See how strong these triggers are? Guys, that's a great indication that we should hold for the next key Fibonacci area. We knew where the market was likely to go. We know where it has the potential to stop, so we can take profits, right? We can stop taking those trades if they're not good. I'm going to leave this for you right here. I'll be back in 5 minutes doing a little mic silence for a second, guys. Back in a few. All right, guys, I'm back. Jose, congratulations. Had nothing to do with the NASDAQ, though, my friend. It had everything to do with your ability to read charts and take the correct trades. Give yourself a little credit, man. That was you. Nice job. I just show up and flap my gums. It's all you. You guys are the amazing students, without a doubt. And let's go through and see some of the amazing things you guys have done today. Guys, when I scroll through, I have to scroll through all the way to the top and then back to the bottom, which means that if you type a question in the room, I may not see it immediately. And if I miss a question, if I miss a comment, just let me know. Say, hey, Mark, I think you missed me here at 10:02. Do me a favor, go take a look at my chart. Mike got us going today. Around 8:30, he's like, you know what? This trade was so nice, I got to make sure that everybody sees it. And Mike says that this is a 50-50 trade, which means that 50% of his indicators of his trigger lines have made it through resistance, but 50% have not. It doesn't mean that he's got a 50-50 chance of winning. Guys, this is your first medium probability trade, the 50-50 trade, where most of your indicator or half of your indicators have made it through, half have not. And when you have this look, it's important that your entry be perfect on the smaller chart, because when you have a 50-50 look, you don't have a clear path, right? This area hasn't broken yet. Mike takes a trade. He takes it all the way back to the area of support inside of favorable large triggers. He takes quick profits right there at his potential trouble spot, and next profits up at the fib. And Mike, this is amazing trading. This is such a great look. This is the advantage of momentum. This is a market. He's trading with the trend, trading with direction, right? Trading from an area. And it worked out beautifully. Mike, that's awesome. Do that 3 times a day. You'll never go back to work. All right. Jay Solar. Here, price reaches a divergence high. And let's go through the list, right? Jay Solar, are you with me? Price reaches the divergence high. Because it's reached the divergence high, this is a termination condition. This is an area that has the potential to stop the market. This is an area that may create a bounce. So because we're trading right into it, the smalls are kind of eking through it. You do take an entry. It's a little high, right? Not quite the areas inside, but you manage it aggressively. No, at the time of the pull, your smalls hadn't made it through yet. You're hoping that they go through at that point, but it's not 50-50 yet. You're trading into an area that it may stop the market cold and launch it the other direction. And you're printing divergences on the way up. So you have a loss of momentum. Your triggers are pulling back. Great entries make manageable trades, Jay Solar. But because the smalls hadn't made it through yet, it is technically a termination condition. Guys, one thing you'll notice is I never tell you how to trade. That's not my job. My job is to help point out advantages. My job is to help you read your indicators. Jose, because you had strong triggers on the 5-1, because you took the pull back to the areas, it created a manageable opportunity. So even if this was going to reverse the market, the momentum pushed you back up to it at least once, and it lets you get paid on it. So it's great management. It's heads up management. See, but Jose, what you're saying is, Mark, I'm going to break my rules because of this. It is. It's coming from a great bottom. It's coming from a termination condition that created a full reversal. Absolutely. This was coming from a termination condition that created a full reversal, right? This was coming from a termination condition that created a full reversal. So Jose, what we run into here, right? This was a termination condition that created a full reversal. So while it's important, right, that termination condition that creates a full reversal, it's important. But that termination condition that creates a full reversal doesn't negate the fact that you're trading into a termination condition, right? Which means that you're forfeiting that advantage of a clear path, which means that you're no longer in a high probability scenario. You're putting yourself in a lower probability scenario. And I'm not saying that that's the worst thing that can happen, because you managed it beautifully. You didn't hope. You were aggressive. You were assertive. You got in at the right spot and you got out before things had a chance to go bad. So Jose, it is a termination condition, but it did come from a strong bottom, which is great, right? I like that you put superb. But remember that just because it's coming from a great place doesn't necessarily mean that the termination condition isn't valid. So if you're going to take the trade, be aggressive. I think you nailed it. I think you did an awesome job, A to Z, on that trade. But of course, because my job is to help keep people safe, I have to point out that it was into a termination condition. And again, guys, just because I say that something is there, something happened, it's not me telling you bad trade. It's just me telling you, because it has a lower chance of success, manage assertively. You did a great job on that one, Jay Solar. Sophia termination conditions create a full reversal. Full reversal create odds favorable. Odds favorable gives you the pullback to the area, right? There's one of those 50-50s. Smalls are through, large are not. You had two divergences against it. You get in at the area inside of favorable large triggers, and you make quick money on the way down. You're like, you know what? 4 contracts at 9 ticks each is $360. I'm pretty cool with that. Managing it assertively, because it's not the perfect trade. Nice job, Sophia. Guys, you're going to see the same people posting charts in here all day long. You're going to see the same people taking the same trades, the same people recognizing the same advantages, the same people getting in. Gary, just so tight on those stops with a clear path with odds favorable. Guys, this is a trust. This is trust. When a termination creates a full reversal, that full reversal gives you odds favorable momentum. And guys, you have the end all be all beautiful entry inside of favorable large triggers. Nice job, Paul. Guys, there's no reason to tighten stops yet. There's no reason. Everything says this market is likely to go down. The momentum is in place, right? This is when, remember when I said don't let fluctuations on a smaller, faster chart take you out of a trade? There it is. So guys, let's talk about how to manage something like this. Okay. You were awake enough to move your stops, right? And I want to show you why we talk about this. Rule 1 is met. Rule 2 is met. We're coming from a good top. Guys, this mid-band is an area inside of favorable large triggers. That's a high probability trend trade if you miss the second trade. That was your, hey, the market's saying sorry, make sure you get in. If you put stops at entries, guys, you're probably going to get stopped out. And that's okay if you weren't awake. I hope that was simulator if you weren't awake. That was a beautiful trade, Gary. Your entry was perfect. And the management could be better. So we talk about it, right? That's what we do every day. Everything is above the area that pulls back to support that's likely to hold. Larger down, smaller down, right? Gary, I'm not sure what got you in right there at the bottom of a bar on the way down, but it worked out for you. Nice job. What kind of trade was that? Oop, and we saw that one already. And I think John Novak showed us the same one that we went back and circled a few minutes ago, right? Look at that entry. Boom. Pulling right back to the area. Targets in place. Can't lose. Tons of money locked in. Beautiful long trade. Slow and steady. Let's see what you did, my friend. All right, starting to get a little more information, right? You got short at 76.57. which is somewhere on this pullback here, I think. I can't see it on your small chart. So slow and steady, we're getting closer. This is awesome. Odds favorable, nothing in the way, right? Everything says down. You took a pullback, and I think that's the same one that someone else took, somewhere right up here at 57. And made some money. And don't worry about what you missed, right? Guys, you're going to miss trades. Worry about what you made. And slow and steady, this is a great read. This is every advantage and an opportunity to make money. If you show me your entry, point, we can help refine that entry. Maybe there was a lot more money to be made. Are you with me, slow and steady? So when you line up your charts, and guys, this is for everybody, do this. Instead of arrows, circle your entry. So let's say just hypothetically your entry was right here. All right, so let me show you. So you got short at 76.57, right? Which is right about here. I can't see it over here. Was it an area inside of favorable large triggers? Awesome. And that's just all that I want to see. Because what it does for you is it creates this study opportunity. And I'll go back and show you what it looks like on my chart. So 76.57, was that your entry right there on the pullback to the one-to-ones inside of favorable large triggers? Because if it was slow and steady, rock star. What a great job. That second chance entry, right? If you didn't catch this one, which was even better, there's your second chance. There's your opportunity to get back in and make that money. Great job, dude. Nice job. But see how seeing the entry? When you took this trade at 57, man, you had 3 or 4 ticks of risk on it. Beautiful. Opportunity to make some cash. Great trade. Guys, it just tickles me when I see people in the student mode that are brand new on demos, and by the end of their first week, you guys are already starting to nail these entries. You're already starting to embrace these advantages, and you're already starting to get into the market at the right spot and using Fibonacci for exits, and you haven't even really begun yet. Gary, 50-50, multiple divergences, you take the pullback. Trades with 1 divergence, use a market flow signal. Trades with 2 divergences, no signal. I hope that one worked out for you. Nope. 2 divergences on a 50-50 makes it tough to make money. Super tight stops again. Nice job, Gary. All right, TJ, are you ready? Great job annotating your rules. Termination creates odds favorable momentum as everything is up. We haven't reached the area. You take a pullback to support directly inside of favorable large triggers, and you exit at the fib with the large chart weakening. TJ, you could not have done this any better. I mean, you literally could not have done this any better. What a great job. So I'm going to steal your picture, and I'm going to open up my spreadsheet real quick because I'm not going to lie. I want to do what you do, and I want to do it the way that you do it. So I'm going to take a hyperlink, and I'm going to drop your link in there so I never lose this picture, and I'm going to call it TJ's Perfect High Probability Trend Trade Long. And I'm going to come back and study it. I'm going to make sure that I can do exactly what you do, because that's pretty amazing. How did you feel when you were in the trade? Were you relaxed? Were you like, man, I have every advantage. This is great. And here we go again. We talked about this one, right? Termination creates a full reversal. I've seen this one today. You missed the best one, right? That was your trade right here. But then you still have odds favorable. You still have a clear path. You still get a pullback right to the mid-band, and you say 2 divergences doesn't freak me out. You get in, third divergence prints. During the trade, the third divergence, so you took the profit right on. So TJ, when this one prints, it's one of those things at this point, you might as well let it run, take it down at that trouble spot, but nice job. Great entries, create manageable trades, and even the ones that don't run are still opportunities. Solid trading. TJF, remind me, how long have you been with us here? I know it's still relatively new, isn't it? And I like to ask this question a little bit because everybody gets to where they want to be at a different pace, right? Everybody's going to see things in a different time. Just dialed in full time a week ago. A week of study. All right, you said this one didn't work, right? Let's see if we can figure out what went wrong. So we're coming off the mid-band. The trigger lines are up. Everything says up. Small's above the large. And then TJF, remember how this divergence line can act as a termination condition? Price reaches it. Trigger lines, small. It's okay though. Smalls break through. Large don't. No divergence. Strong triggers. So the one thing that would have saved you a lot of money on this trade. Are you ready? Oh, I like this picture. Because, guys, this is one of those let's develop trust moments. And that's okay. It was 50-50 on it. It was not necessarily, it was an area with the potential to break but hasn't broken. And you had strong triggers and you had no divergence. And what I want you to see, TJ, is that your entry for this trade was right here. Right when those bars came down and hit support, that's that rule number 3, perfect, defined. This is where repetition is going to create that trust. And a week ago, you're a week into it. You're taking the right trades, but you're taking them late. Does that make sense? Because if you had taken it right where you should have, when you get those reps and you're good, your stop is right here. You've got 6 ticks of risk on this trade, and you're not giving away money all the way down here. Remember, stops go below the window of opportunity. And if this market cruises below these 1-to-1s, jump ship, brother. Wait for it to get great again. Does that make sense? And that's one of the great ways that you can take these losing trades, because they're going to happen every now and then, but you can minimize risk to a point to where those awesome longs that you took, right, those trades that you took before, that great looking short, that rock star long, you get to keep a lot of the profits by not giving them back on those trades that aren't working. Great job, dude. And great job posting. And this is what we're going to do every time. Feedback every time. I'm going to talk to you about everything that you see, that I see, that I think you can do better. But Bradford, we answered this one on the 1-to-1s. Scotty, that was your test. Safia. Let's see what Safia did today. Figure out where we are. 938, 951. So we were somewhere right about here, right? So we're coming into the 50-50, Safia. There's that divergence high. Right? Small trigger still outside. Everything says up. Notice how you're weakening here. Second divergence coming through. Because of the loss of momentum, because of the divergences, that's okay. You still get in, right? You get in at an area of support inside a favorable large trigger, Safia, and your target or your stop keeps you safe. I'm going to say, so far, so good. Great entry. It does go to the bottom of the window, but your stop is where it shouldn't go. And because it's not a high probability trade, because it's a 50-50 trade, you're able to take quick profits, right? That's 4 points on 2 different contracts. And then when it reaches that divergence high and divergence prints at a potential termination condition, you manage out. I think this is a beautiful trade. I think it's well executed. I think your stop placement is great. I think your willingness to take profits before things go sideways is awesome, and your awareness that it's not doing what you want it to do is phenomenal. So Safia, I want you to apologize to Safia and say that maybe that was your best. Maybe that's some of the best management that you've shown me in a long time, right? Because that's what you've been working on. You've been working on that management, and it's showing. Your efforts are showing. Nice job. Jerry, you're asking about the different one-to-ones. No worries. So let's do that. When we talk about those one-to-ones, there's two of them, right? There's the big swings, Jerry, the giant swings, the A to B, and then what comes back creates the higher, the C. That's the potential there, right? So all that the small swings are, they're just taken from smaller moves, not those giant moves. Does that make sense? It's a different set. Yeah. So this is my thought on the purple one-to-ones. If they're on a large chart, I watch them. That may be a bounce point. If they're on a small chart and they line up with my entry area, I love it, but I'm not giving them a lot of credit on a smaller, faster chart. It's just not a big enough calculation. People aren't really using it. But on the large chart, and where I find that they really come into play is on the NASDAQ. You'll see it on the NASDAQ, and you'll see them bounce off there. Guys, look at this. Smalls below the large. The large are wide. They're angled in the direction of the trend. Everything is down. Everything's coming down. I wonder if it's appropriate, even without the reversal bar, to put an entry just below an area of resistance inside of favorable large triggers. Did you see how quickly that analysis happened? That's what's going to happen for you, guys. All right, Gary, termination condition. You decide to take the trade anyway, and it doesn't work out. Not surprised. Mid-band reached. You're looking for a potential high-volume area trade. No reason to take trades into termination conditions, guys. There's just, why hope, right? Hope's a rough way to make a business. Mike again, 50-50, strong triggers. Oh, going up, right? 50-50, everything says up. You had two divergences. Beautiful entry. Third divergence prints. We know that it may terminate the trend. Exit. You broke your rules. You entered the one-to-ones mid-band inside of favorable, but you forgot about news. Okay, you traded right into news and said, I'm not going to be in that trade. Mike, that was heads up, man. When I was new and kind of still wet behind the ears, I can tell you that I traded into news before and just kind of hoped. I was like, man, I sure hope that works. And got run over. All right, Gary, everything says down. And this is kind of my example of the NASDAQ. NASDAQ can create a bounce, right? But he has odds favorable. He has everything down. He's coming from off that resistance. Perfect entry inside of favorable large triggers. And then it gives that higher divergence to start pushing it up a little bit. I think it's a great trade, and I think it's great management there, Gary. Nice job. It's fun watching you guys come together and just keep getting better and better and better. Confidence comes through repetition, guys. Confidence comes through trust. Gary, 13-2, smalls below the large, directly into a termination condition, and you took it. I'm not sure. You cheated and you used the large chart. All right. Changing up your plan midstream. I like it. It worked out for you. Nice trade, Gary. Just that continuation. Bad top goes back to the mid band. Everything rolls up. You take an opportunity with every trigger agreeing. Can't get mad about that, right? And guys, this is a great pattern. Let me share it with you. And Gary's seen this pattern enough that it really helps him out. When you get a pivot from space, you're going to see people annotate like that. A pivot from space, a pivot that's not coming from Fibonacci, that's not a termination condition, that mid band really becomes your first target. If it bounces off of that mid-band, support around the mid-band, and everything rolls, very often you're going to see this pattern where it continues up to that next key Fibonacci area. And when all of your triggers agree again, there's Gary taking a cool little momentum style pop. Boom, boom, taking advantage of it. It's amazing chart reading. And this is a pattern that the longer you spend with the software, the more you're going to recognize it. Hey, DH Next S713. Good job on the messages. I see you. Read you loud and clear. Gary, solid trading, great pattern recognition, and great patience to take advantage of it. I love throwing praise, guys. It makes me happy. And then here we have that 50-50, one divergence. You did get a signal right from the HVA. This one fits your rules to get in. You're killing it on that Practice Apex account. Keep doing it, man. Keep doing it. Keep taking those best of the best. Commit to your rules, guys. If your rules are met, 50-50, one divergence, pullback, market flow signal. Gary, your rules say that's your trade. Commit to your rules, guys. They're your Bible. They are what's going to keep you in and out of trades, what's going to get you where you want to be. Pinieski. Paul, let's see what you did, bud. That was a termination, so no trade. So he's going to hold at break even due to the 13-2 strength. Waited for this one to clear in the clear path. Perfect entry. Quick profits. And because the large chart is screaming down because the small triggers have rolled, Paul's not willing to lose, but he says, let's see if this thing wants to crank to the next area. Nice trade. Guys, that's that management side of thing that comes through repetition. There's that bad top. Remember we said the mid-band tends to be the first point, right? Not a termination, just a pivot with a loss of momentum. Looking for that mid-band potentially, and it got reached. Everything says down. But guys, we're 50-50 on 1, 2 areas. Divergence prints on the 50-50. The triggers are split. So many things wrong with this look. Gary, I'm happy to not see an entry there. Nice job. Luciano, long time no see. Luciano, 50-50, right? 50-50, no divergence, strong. There was your reversal bar. Could have been a tiny little loss, and I think that we talked about this one with somebody else too. Yeah. Guys, if it's 50-50, use those reversal bars. You were up $200, and it came back and took 4. Quick profits on a 50-50. Not a bad idea, right? Luciano, you know. And you can go through. And that's the only note you needed to put for yourself, right? Need to manage better. When you've been around for a while, guys, I know what you're thinking when you enter a trade. But Luciano, yeah, use those reversal bars, right? Gary, traded into a termination condition. Let's change thought to hoped. Hoped that momentum would change the fact that I'm directly into a termination condition with divergence and all this good stuff, and it did exactly what that termination condition typically does. Guys, this is why I tell you, learn your termination conditions. Paul, love it. Not only are you qualified, you're up $1,000 in that paid account. Beautiful work, Paul. Man, feels good when it comes together, doesn't it? Guys, isn't it cool to watch other people succeed? And you wonder, how did you get there? Paul, how'd you get to where you wanted to be? Well, Paul's going to tell you. I posted in class every day and I asked 1,000,000 questions. And anything I wasn't sure about, I looked for clarity. And then, not to air any dirty laundry, went from chasing everything, went from trying to catch every move in the market to focusing on catching the best moves in the market. And it changed your fortune, Paul. Great job. All right, Bradford, everything says down, giddy up. Here we go. Beautiful trade. Bradford, I'd love to see an entry on these, right? Because I want to praise you on the entries as well as the momentum and the clear path and everything going on. And I want to ask, why no trade here, right? How'd you miss that first one? Sometimes we got to go potty, guys. The coffee hits, right? I know exactly what that one looked like because we talked about it, right? But Bradford, do you know how to take? Are you using TechSmith Capture or are you using Snagit? Oh, check it out, guys. I forgot that we did this. Odds favorable, clear path. Look at my entry. My stop kept me safe. I made money on the first one, but I wasn't present to move my stop to break even on the second. That was a trade that was manageable. So when you use TechSmith, and it's the same concept as Snagit, so I'm going to show you something. Do me a favor. When you're taking that picture, if you hover over just one chart, it's only going to give me one chart. But if you left click and drag, you can get all the information on two charts. So I can see not only your entry chart, but also the reasons that you looked for that entry. And what it does, Brad, as we move forward a little bit, is you start to really get into it and you need maybe a little help on entries, a little help on management. It's going to give you an opportunity to get the best feedback so I can kind of get you where you need to be, and you can get you where you need to be. So try and get both of those charts. Show me the entry chart and show me the, whatchamacallit, the large chart as well. But guys, do you see how this worked out? There's my entry. There's my reversal bar. There's my $100 profit. At that point, I should have been break even, right? But I was teaching a classroom and I forgot that I activated the limit order. Another opportunity for quick winners. And then that second higher divergence, those weak triggers, right? Kind of changed everything. Gave me an opportunity to manage out. I'm sure some of you are going to show me that picture too. All right, TJ, let's look at it. We already saw that one. TJ, did you just repost afraid that I wouldn't catch the first ones? Which is cool if you did. But this looks like just a repost of what you put earlier. And it may be because I said, hey guys, if it feels like I didn't get your picture, go ahead and let me know. That's okay, no worries. Yeah, I don't ever want to miss anything. So I'd rather you do that and say, oh, disregard, rather than go, oh, he missed me. I guess I'm not going to do anything. And then, Paul, you had the stop where the signal would print for only 5 ticks risk. It was worth a small shot for you to get in with everything pushing down. And let's go to the most important factor of this one. Let's get all of these charts out of here. Blah. Keep it on 2 charts. You guys ready? Everything says down. The trend is down. And let me show you how you can simplify. Both the small and the large triggers break through support, meaning that the path is now clear to the downside, right? Support begins to act as resistance. But I don't have the advantage of momentum here. Paul says I'm not working with the best trigger look ever, but I do have a clear path, right? And I do have an area inside of favorable large triggers. So it becomes a medium probability scenario. And Paul says, you know what? I'll take this medium probability scenario and I'll manage it assertively. So when I take my best of the best entry, I'm going to go ahead and take profits quick, right? I'm going to get to break even quick. But my large chart in this sustained downtrend says that the path is clear all the way to Fibonacci support. And look at those exits. One in the middle just to make some money. Doesn't let one little fluctuation scare him out. And out at the second fib. Paul, amazing trading. Medium probability trade, managed accordingly. Absolutely beautiful. Guys, it's going to take you a little bit of time for it to look this effortless. Understanding advantages lets you focus on advantages, right? Understanding advantages lets you know when things look good. Gary says termination, strong triggers, 50-50, no divergence, looking for that entry. I like it, Gary. Solid look. How'd it work out? Safia, entry at 1036, 1036. So Safia, clear path, no termination conditions. Market pulls up. Did you wait for it to get to the other side of the small trigger, Safia? It looks like you did. It looks like you let it break through and then took that little pullback. Quick profits, more profits. Nice trading. It didn't fill, Gary? Would it have filled? Just curious. If you put your entry on the other side of the one-to-ones, just below the large triggers, a lot of times if I'm this close, if I'm a tick off, I'm willing to do it. I'm willing to spend that extra 2 ticks so I don't miss it. Woulda, coulda. Well, but at least it's something to think about, right? If your large triggers are resting on top of those one-to-ones, yeah, give it a couple. Because with everything looking great, you know, why not? You have advantages all over the place. Oh, there she is. Odds favorable momentum. Price reaches Fibonacci support. Absolutely no trigger lines break through. Man, there's a term for that, isn't it? Or did it not quite reach it? You stayed a couple ticks above, Safia? It's hard to see here because of what's happening, but this fib is this fib, which means that technically she didn't reach the area. So by definition, it's not a termination condition. What it is it's odds favorable. Didn't quite make it. So she says, because it didn't quite hit that key area, and I put a lot of faith, right? But do you see how the synthetics let you gauge it here? Because this Fibonacci on your small chart is this Fibonacci on your large chart. It's synthetic. You can visually see that it didn't quite make it. It's close, but that perfect entry, right? Low risk, and right back to that trouble spot that could be a termination condition. Safia, it's like next level Safia this morning. How are you feeling today? Are you calm? Because everything you're doing has advantages. Everything you're doing. No. Well, shoot, you should be. I'm calm for you. No worries. Gary, and that's that same one that I forgot and left on. That's a beautiful short, and that's great management. Odds favorable. Oh, that's okay. How about we erase stupid from the equation and we just say the mistake you made? Mistakes can't be stupid. Mistakes are just mistakes. Stupid would be doing it on purpose. Right? Making mistakes means that you made a mistake. Gary, great trade. That's the same one that I set up. Man, that's a rules-based trade. And when that higher divergence prints, you get out of it. At 29, it only had to make it to 19, and it didn't quite get out of there. Didn't quite make it. And then Paul, same trade. No, maybe not. Yep. Crude oil, cranking down. Yours is 50-50, one divergence. You wait for it to roll. Nope, you get in. Quick profits right there at 20. And your break, looks like you lost a couple ticks on that one. That's okay. That's a great trade. I would give up a couple ticks all day long on that trade. This is the spot that it's going. It's tight, 50-50. There's the divergence. There's the entry. Hopefully that worked out for you. Joel, beautiful trade, quick profits, no losses. Joel, great job, man. Solid trading, Joel. Solid trading, Paul. Solid trading, Gary, Safia. 50-50, two divergences. Zing! Yep. So let's ask ourselves on those 50-50 trades, let's back up a minute. And this is for you newer people that are like, what the hell is he talking about 50-50 trades? We know that if price reaches an area, none of the trigger lines break through, it's a termination condition, right? No more trades into that area. There's no reason. We know that if the small and the large get through that area, well, now the area is broken and now you have a clear path. And that's that simple getting into it, right? That's that best of the best. That's giving yourself all the advantages. Well, guys, there's a scenario, and this is your first medium probability trade. And this is called a 50-50 trade. But what we learned yesterday is that 50-50 makes people believe that that's your chance of success. 50-50 means that 50% of your trigger lines have made it through the area, 50% have not. The idea is that this area is not broken because the small and large aren't on the other side. The reality is that it has the potential to break, but when you're taking an area with the potential to break, it's imperative that you have odds favorable momentum. Why is that? Because if the recipe for a trade is dependent on advantages, right? And those advantages are momentum, a clear path, and an entry area. Well, when we have an area with only the potential to break but hasn't broken yet, then we don't have a clear path. And that's what you're seeing on these trades that everybody's taking, where the smalls are through and the large are not. They're calling it a 50-50 because 50% of the trigger lines are through and 50% are not. If it's easier on your brain, call it a straddle trade. Call it a one above, a one below trade, right? But what it means is that this 69 area hasn't broken. The 6980 area is not a broken area. It's not a clear path. So you gotta have odds favorable momentum, right? You've gotta have that best of the best because you're not gonna forfeit any other advantages. And you also have to have that entry area, that small window of opportunity, so that you can keep your risk low because it's not a clear path. Here was a 50-50 trade, and that market ultimately goes up. Here's another 50-50 trade, and the market continues up and the area does break. So guys, when I talk about a 50-50 trade and I'm talking about entries, for me, because I'm selfish, when I have an area with the potential to break, to me it's imperative that I don't forfeit any other advantages. In my entry chart, I want no divergence. I want no visual slowdowns. I don't want to forfeit momentum when the path isn't clear. I want to make sure that I have strong trigger lines. I want to make sure that I'm mimicking that momentum. Rule number one for me is imperative on a 50-50 trade. I know that I've already forfeited the clear path because it hasn't broken yet, so I'm going to insist that my window of opportunity is small. And guys, when you take these 50-50 trades, they're not high probability trend trades. There's a different approach to them. I didn't talk about it when I presented it the first time, but I'll talk about it right now. When you look at that simple trading plan that I put in front of you, I've included your 50-50 trade, that first medium probability trade where the issue exists. One area not broken, not four areas that the large triggers haven't made it through. One area not broken. Did I have momentum on my small and large charts? And this is a key, guys, and this is so important for the new users because this is going to strip you of success more often than it doesn't. There should be no divergence on the 5-1. This, for me, is key. And then for a good top or bottom, is the market coming from a termination condition that creates a full reversal? If it's not, the likelihood of success goes down once again. You'll notice that again I put divergence, no trade. I'm reiterating that a loss of momentum when the path isn't clear lessens the likelihood that that area is going to break. And because it's not a high probability trend trade, it has to be managed differently than a high probability trend trade. You're still going to use the window of opportunity. You're still going to put your stop outside of that window of opportunity, and you're still going to use that reversal bar to reduce risk as much as you can. Here's the third time we see it. If divergence prints, I'm getting out of that trade as a brand new user as I'm learning to read my indicators. Because if divergence prints, now I've lost momentum as well as a clear path. And my first contract's coming off at the first trouble spot, the first divergence line, the first set of 1-to-1s, the area that hasn't broken. I'm taking profits. And if it's only $50 profit, then I'm taking $50 profit and I'm getting to break even and I'm looking for small profits. 50-50 trades are not home runs. So when you look at this trade and you begin to add it in, you're going to have to gauge a little bit. If the smalls are through and the large are not, and Paul, I'm going to apologize for beating you up a little bit. Notice that the momentum has decreased, right? The small triggers have begun to return to the large triggers. My momentum is slowing. They're still below, but it is slowing as those large triggers try to break through but hasn't. I get one divergence, and then I get a second divergence, and I have weak triggers. As I'm coming into this area that doesn't break, my small chart is telling me, Mark, you don't have a clear path over here, and you don't have any sort of momentum supporting that breakage over here. And unfortunately, and I hate it when this happens to you guys, this one doesn't work. But that small window of opportunity, that's a tiny little loser, guys. That is from 46, less than 48. That's less than 2 points. Because if it breaks, it goes forever. If it doesn't, Paul's able to manage risk. But do you see how the forfeiture of momentum coupled with the forfeiture of a clear path, guys, that can hurt. That can definitely change the dynamics. And that was it. And we saw that one. And Joel, we saw yours. And Paul, we saw the result. And I'm going down. Gary, the small's outside. The path is clear. Divergence prints. No areas inside of favorable large triggers. What do you need to watch for? Gary, in order to take this trade with less risk, you need an even higher time frame telling you that there's odds favorable momentum in the direction of the trade. Support's likely to hold. You line it up, right? Let the triggers roll. How's that for a patience piece, Gary? Let me see if I can help. Let the triggers roll. When you suspect that support is going to hold, just let them roll. It's going to help. You NASDAQ traders, fighting small triggers is a recipe for absolute disaster. There's a picture I took of the NASDAQ yesterday. Guys, and I'm taking this for you guys that are trying to get good with trading the NASDAQ. If these small triggers are down strong, relax. I use that gap theory. If I have a full bar, this is from trading yesterday, guys. I take the first trade and it reaches the small triggers and I take profits and I get out break even. And then I don't fight those. Well, I did. I fought the small triggers once for the second entry and it kicked my ass. And then I let it get to the other side and it did exactly what it was supposed to do. Guys, if you're a NASDAQ trader, fighting the small triggers is going to be detrimental to your long-term success. I've been studying this for a few weeks now. Absolutely, I will, TJ. Mike M., not a termination condition, right? But you do have smalls below the large are wide, and you had 3 divergences on the 5-1 showing that change. You take the perfect entry inside of a mid-band and you take it all the way down. Beautiful trade, Mike. Once again. Nice job. All right, TJ, let's do it, man. Window of opportunity. We'll start with a long trade. So the process, actually, you know what? Let's do it this way. Let's do it bar by bar. Because I feel like that's going to help us out. Let me get these markings off of the chart real quick. No cheaters, right? All right, so here we go, TJ. 13.2 says odds favorable. 13.2 says clear path. You're comfortable with that, right? Everybody's good with that? Cool. That's the easy part, isn't it? And that refinement process is what takes a little bit of time. So I look at my smaller chart because the large chart says it's time to make a decision on taking a trade. And I'm just going to sit on my hands as it's trending down. I notice that I have a fib right here and a mid band up here, and the large triggers and the synthetics are coming down. Cool. Hey, Paul, have an awesome weekend, man. We're neighbors now, you know. I'm in Washington. I mean, it's a long walk for a cup of sugar, but we're in the same state. It's awesome. I love it. The people are amazing. The weather's like Texas, but there's no humidity. So I'm digging it so far. I'm having a good time. It's very similar to Texas, I think. So TJ, the market's going down and you're like, oh, it's going without me. I'm so nervous. This is crazy. What am I going to do? I've got areas. I've got large triggers. I've got favorable large triggers. If only I could get a reversal bar. And at that time of reversal bar, TJ, what I do this mentally at this point. You may want to use a drawing tool. Have a rectangle on the ready and go from the bottom end of your trigger lines to the top end of your trigger lines, right? So now I've identified where these trigger lines are, and that's only the first part. My window of opportunity goes from the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. And I create this window of opportunity. My initial stop when I put it in is about 12 ticks. And the market comes up and it smacks right into it, right? And we're really at the top of that window of opportunity. I'm not going to lie, there's going to be some of you that are going to try and be really tight on your stops. Oh, it's outside the window of opportunity, Mark. Guys, when my large chart is perfect, and you don't have to, I won't tell you how to trade, but when my large chart is absolutely perfect, I'm going to keep my initial stop at about 12 to 14 ticks. I'm going to give the market a little room to overrun when everything is perfect. If it's a 50-50 trade, I'm not. But if it's a high probability trend trade, if it's a termination that creates a full reversal that gives me a clear path and odds favorable, I'm going to keep that 12 ticks on there. And in this case, that 12 ticks keeps you safe, right? Right up to that reversal bar. But TJ, the idea is being able to find that bounce point, guys. The areas inside of favorable large triggers are like a big brick wall, and you're a 9-year-old with a tennis ball, throwing it as hard as you can, right? You're giving it everything you got at that wall. And that wall, more often than not, is going to create a bounce. Tennis ball comes the other way. Geometry's in place. Angle of entry, angle of exit, all that good stuff. But what happens is this wall gives you a bounce point, and this is why we wait for those areas. Because it creates that advantage. It gives the market something to reverse off of. Guys, Fibonacci is a reflection of fear and greed, right? People get scared, people get greedy, the market goes up, the market goes down. When you open your software, and this is what a lot of people don't realize, the genius that goes behind coming up with these fibs, is when you open up your 13.2 chart, when you open up your large chart, your software begins running thousands of calculations, and it's running calculations on every pivot, every swing, every move up, every move down, and it's measuring them, and it's creating Fibonacci retracements and Fibonacci alternates and projections. And it's not just doing that on every pivot for the day, it's doing it on 10 days back. And then it's creating synthetic time frames, right? It's going higher, it's going lower, and it's measuring all of those. And guys, it's unbelievable the math that goes into this. And then it starts to sort every one of these areas. It starts to sort them out. Which lines are the most important? What prices have the highest concentration? And guys, it's all of these lines and all of these calculations that give you these areas of resistance, that give you these areas of support. And when John Novak was creating the algorithm for this software, He had a friend in the pits in Chicago. And the guy's job in Chicago, his whole job was to know where the institutions were buying or selling, knowing where the key prices were, knowing where the reactions were most likely to happen, right? And those areas where they're most likely to happen were fibs. And John Novak created his algorithm, and every morning he would call this guy and he'd say, hey, Billy Bob, Billy Ray Cyrus, whatever his name was, I have no idea. These are my prices, because obviously the guy couldn't give up his prices. He couldn't say where they were. But John would call him, he goes, these are my fibs. And what he found, and when he knew that the algorithm was right, is that he was typically within 50 cents, typically within 50 cents of the prices that the institutions were going to use. And guys, this is why Fibonacci is so powerful. And then on a different note, this is why Nexgen is so powerful. Look at that to the tick, all the indications telling you where the market's likely to stop, where the market's likely to go, when the market is losing momentum, when the market has momentum, when a mid-band is likely to hold, when support is doing its job. We've established rules, a methodology that's been proven over decades to teach you how to take advantage of this. Guys, it's the most powerful software in the world, and John Novak's been telling people for 20 years, if you can find something better, tell him, because he'll buy it. He's told people that for 20 years and nobody's done it yet, guys. There's a reason we're still around after all these years, because Fibonacci works. And when you learn how to take these 3 simple rules and work it, when you learn how to read your charts, Fibonacci works for you. So embrace the study, right? TJ, sorry, that turned into a little bit of a soapbox, but that did help. Awesome. And guys, that's it. It's repetitions. Rinse and repeat. Rinse and repeat. Over and over. What's the market doing? What do the indicators say? Where's my best chance of success, right? Eventually, your high probability trades, your ability to read a chart in the moment is going to open up the door for medium probability trades. But this pattern repeats itself. And guys, I tell people, and it sounds cocky, and I never mean for it to. I tell people, if you're skeptical, good, right? If you think I'm full of crap, good. Prove it wrong. Go back, do the study, go through it historically, simulate it, follow the rules, read the spreadsheets, right? Use the checklist. Give it 10 days of honest study. Give it 10 days of getting feedback. Give it 10 days. You may not be a professional trader in 10 days. Most people aren't. But what you are going to realize is that this classroom is freaking amazing for getting you where you want to be. And that's not about me. That's about you guys having the courage to post in the room. The feedback is going to help get you where you want to be. Not a channel, just a termination condition. That's it. Hasn't created a full reversal. Small chart, who cares? Large chart says support held from a bad top, probably going up to 15,815, right? Gary sees that pattern. But Gary, this is why, if you think it's going to hold, let it hold. Let the triggers roll. Give yourself that advantage. Great read. Good morning, Ziva. Ziva says, when everything says up, when the momentum is strong, when the path is clear, she takes the entry inside of favorable large triggers. It does dance a little low, doesn't it? But your stops keep you safe. Behind that reversal bar, off it goes, and Ziva makes money. Nice job, Ziva. Not an HVA long, just an HVA line, right? Just an HVA line. Rules not met, not coming from a termination condition. That's just a line out in the middle of nowhere. Great trade. Guys, I'm going to take 5 minutes real quick. Probably not. I'll probably take 2 minutes, but I have to refill my water. And when I come back, guys, the last 30 minutes is you. I want it to be your questions. I want it to be your areas where you need a little bit of help. We'll talk about it. If you need help entering or exiting, like stops, targets, stuff like that. I remember somebody asked yesterday, and I apologize, I don't remember who it was that asked. I gave you a link to the ATM strategies, but if you need some help with it, let me know. That'll be my focus when I come back. I'll see you guys in just a couple minutes. Let's run through the process again, guys. Let's take a pre-trade picture. What does that mean? That means that I haven't entered yet, but I've placed an order. And from this pre-trade picture, guys, I'm going to put my trend trade checklist on it. Am I coming from a good bottom? I'm not. Not a deal breaker. Just means that I don't have the absolute best look. Probably not a 70 to 80%, right? But still up there. I do have odds favorable. I do have a clear path. And then TJ, reversal bar prints from the top of the triggers to the bottom of the triggers. The area of support inside, I do have an area inside of favorable large triggers. Guys, I've done everything that I can possibly do in this trade. And the market didn't come back, did it? Not every dollar that happens in the market is mine. But had it come back, guys, give me a Y in the room if you see it. It would have been a rules-based trade, wouldn't it? But now we're coming into Fibonacci resistance. And none of the trigger lines have broken through. So now I have to sit on my hands again. I have to wait for a clear path. Smalls are through the area and the large are not, right? But we're coming from a termination condition. There's a second higher divergence. There's a pullback to a mid band inside of favorable large triggers. You NASDAQ traders, small triggers coming down against you, have to be aware. But it's a 50-50. My smalls are through, my large are not. And 815.25 hasn't broken yet. It has the potential to break, but it hasn't broken yet. I've got a loss of momentum on my smaller chart. And now I've got small triggers down. Giving up a little bit, right? Oh my goodness. And then once again, we don't fight small triggers on the NASDAQ. You can if you want. I absolutely refuse to fight small triggers on the NASDAQ because more often than not, that's what happens. NASDAQ traders, give me a Y in the room. And all you traders, area with the potential to break but hasn't broken, right? Not a clear path, and now a loss of momentum. There's no reason for you guys to sit and hope that that trade works. And if you're a NASDAQ trader, those small triggers say, dude, hold on a second. Turns out that this might be just a little bit of overrun. And now the large triggers are down and the small triggers are down. And we're into that mid band, which is the first potential spot, right? And I don't have odds favorable. Do you see how I just keep talking? And guys, I do this when I trade too. What am I looking at? Well, I'm in a downtrend. I'm not looking for long trades. Well, my smalls are below my large. That's rule number one. I'm not looking for long trades, but I do have momentum down. And I'm looking at large triggers, but I don't have any areas anywhere near it, which means that I can't have an entry for a high probability trend trade. And then some of you are saying, but Mark, it's a bad top. It's a pivot. There's no divergence. We reach the mid-band, and those large triggers are a full bar away. What does that mean? That means that the mid-band is acting like a termination condition, guys. That means that when price reaches that mid-band, or any Fibonacci for that matter, but when price reaches a mid-band and the large triggers are a full bar away, when they're all the way up at that reversal bar marker, your mid-band is behaving as a termination condition, which tells me sit on my hands, right? Let's wait and see if it closes the gap to those large triggers. And sure enough, it does. Keeps you out of that momentum style trade. And when it's a bad top, when you have a termination, or it's not a termination, it reaches the mid-band and the large triggers don't follow, guys, there's potential that we're on our way up to the next key Fibonacci area, especially when we come from a termination that creates a higher divergence, that pushes us up beyond the area, that gets us to the mid-band, that closes the gap, and oh my gosh, look at that market go up. These are patterns that you're going to recognize over time, guys. There is no long trade yet. But we're sure as hell not going short because of the gap theory. We're not going short because of the bad top directly into the mid-band. And guys, now look how your small triggers are starting to turn up. Your large triggers were never able to follow. Your small triggers are up and your large and synthetics are trying to turn. We're sitting on our hands and we're waiting for advantages. Gary caught this one earlier, made it look great. Guys, now the smalls are up, the large are up, the large are up, the synthetic are up, the smalls are up. Everything says up. The trend is up. We just got to clear a little bit. But when bad tops hit the mid-band and the large triggers don't follow, let's see if we get to 15,838. I'm going to put a little box on it because this is a pattern that I recognize. When a pivot doesn't happen at Fibonacci, right back to the mid-band, giddy up to the next key fib area. Pivot didn't happen at Fibonacci, right back. It ultimately finishes, but this is why we wait for rules to be met. Does that make sense to everybody? I used to think John Novak had a crystal ball when he would say stuff like this. Not going short, even with odds favorable momentum, because here's the pattern. Here is one of the 30,000 pictures that I've taken in my life, and I've seen this happen over and over and over. Guys, if you're brand new, you haven't seen this happen over and over. You're developing reps. Pretty cool, isn't it? And we'll see what it does. We'll see if it reaches that box. It may not. I don't know. My rules aren't meant for a trade, so it doesn't really matter. 50-50 trade with divergence doesn't work once again. And then what did this one look like? Is that the one that we looked at earlier? Yeah, it was. Perfect trade, beautiful entry, higher divergence changes the direction. Straight to Fibonacci resistance. Notice how this isn't a termination, it's just a pivot from nowhere, and it pushes right up to that resistance right by the mid-band. I wonder if the crude oil traders are looking to go to 74.46. I know that I'm not going to try the long, not into a big red fib, but I wonder if. Paul, I may have adjusted mine a couple times. I'll rebuild this weekend too. Do you see how much the market slowed down at that Fibonacci area? Buyers and sellers fighting it out, guys. We don't have to worry about them. We just have to wait for our rules to be met. 50-50 with divergence doesn't work out. Market went up. Directly into resistance. Market stopped in its tracks to the tick. To the tick. God bless Fibonacci. And my ability to have rules to keep me safe. What do you guys want to talk about? There's all your live chart recaps, right? Oh my goodness, there it goes. Patterns make the world go round. Guys, how do you get to where you want to be? Post your pictures in the class. A lot of you are being quiet. A lot of you are shy. All of you alpha males and females used to run in the CEO rooms, chief surgeon, number one lawyer, architect of the year, afraid to put a picture in the room, right? Don't be scared, guys. Throw it in there. I don't care if you're right or wrong. I actually hope you're wrong in the beginning as a new user because it gives us an opportunity to teach, right? It gives me an opportunity to give you lessons that are going to make you better than you are right now. What do you guys want to talk about? I'm going to shut my mouth. It's on you. Somebody give us a topic. I'm going to mute. Mute until the question comes, guys. Or we can sit here for 25 minutes. Either way. I'd rather talk, though. Mic silence. It can be, can it, Ron? It's okay. I'll tell you guys a story. So when I was 24, that's it. You should have had questions. Now you're going to have to listen to my stories. When I was 24, I met my wife and I decided that I wanted to do more in life than just be a bartender in downtown Dallas. And I decided that I was going to go learn a trade, and I went to a motorcycle mechanics institute in Phoenix, Arizona. I was going to learn how to work on motorcycles. I've been riding motorcycles for years. I love my motorcycles, and I thought, man, what a great way. I love mechanics, and I can't do math well enough to be a mechanical engineer, so I'll be a mechanic. And I go to the school, and the first thing that they teach is theory. Guys, they teach theory. This is the basics of what you're going to need to be successful. The exact same approach that we take in this class. Here's your theory. Here's your basics of what you need to be successful. And guys, when you go to an institute like this, you are surrounded by convicts and you are surrounded by people that are out of the army, and you're big tough guys and craziness. And most of these guys understand mechanics already. Most of these guys are in their 35, 40, and they're intimidating. But you're in this theory class, and I'm on the front row because that's the kind of student that I am. And the instructor says, all right, let's talk about camshafts. And everyone's like, yeah, camshafts, camshafts. And I'm sitting there and I'm terrified because I'm surrounded by all these people that seem to know everything. And I have no idea what a camshaft is. I don't know what it means. I don't know what it does. I have absolutely no idea. So I raise my hand. And when I raise my hand, the instructor goes, yeah, what's up, Mr. Novak? And I say, hey, what's a camshaft? And the whole place snickers. Oh, he doesn't know what a camshaft is. And what I realized that it didn't matter what they thought, guys. I didn't know what a camshaft was, so I asked for clarity, and I got that clarity. And I stuck out that school, and it took about 9 months to get through everything. And I earned all my certifications, and I graduated at the top of my class. And I went on to be a mechanic for a few years, but it wasn't my gig. But the reality is that if I hadn't raised my hand, if I hadn't asked that question, if I hadn't made myself just a little bit vulnerable to make sure that I got what I needed, well, then I might have never gotten what I needed. And this class is the same way. It's okay. Nobody's going to go, oh my gosh, they're brand new and they don't know everything. Oh my goodness. NASDAQ traders, how did fighting the smalls work out for you? Just curious. So that's my story, guys. Don't be afraid. I'm pretty warm and fuzzy. Anybody have something cool going on this weekend? Nubian Man, big plans for the weekend? Dano? Anybody going to the lake, going to the beach, going to the mountains? Anybody going to do some market replay? Studying Nexgen? Studying Nexgen. That's totally different, Mike. I'm not sure I approve. 8 soccer games. Oh, goodness gracious. Have fun with that. That's awesome, man. Enjoy it. It goes quick. I missed one wrestling match in 4 years for my son in high school. Market replay. I like it. I'm going to do something fun. I'm going to go for a hike. I'm going to go to the river. I'm going to take a walk. I'm going to clear my head. I'm not going to focus 100% on Nexgen. I'm going to give my brain a rest. I'm going to take a little bit of time to do market replay, but I'm going to make sure that I take care of me too, guys. I'm going to make sure that I get to the gym or do something good, right? It can't all be Nexgen. Beaches every day. Must be nice. Where are you at, Mike? Are you one of our Florida people? Carlsbad? Oh, very nice. I love it. Gary says termination condition, waiting for those triggers to roll to look for the HVA. Great job, Gary. Good restraint. I do love the beach. I just like the sunshine. 100 degrees here, I'm as happy as I can be. You put me in 50 degrees and I'm in an overcoat, wondering where I went wrong in life to be stuck in that situation. Termination conditions. Just waiting. Termination condition. Guys, isn't it great to have something in place to keep you from losing money into a big red line? Isn't it awesome to have a rule that says wait for a clear path? How many people watch termination conditions work and go, oh, thank goodness. Man, 7-week camper van road trip. Jim, that sounds awesome. Rockies from Phoenix up into Canada. Hey, you know what? I'll see you in Canada. We're going to Canada in a couple weeks. I'll be up in Banff. I'm so excited. We're even doing the whole touristy thing where they put you on a bus and go see all the lakes. And we're going to do Glacier National Park. Is that what it is in Montana? We're doing that. 3 weeks to Banff for you. We're 8 hours. Can't wait. That's been bucket list since I was a little punk snowboarder. Waiting to see if it breaks or doesn't break, Gary. I like it. I'm so excited to go through South Dakota. God, it's so pretty. That's my wife and I are celebrating 25 years married, and that's what we're doing for our anniversary. We're going to take a little road trip and go enjoy the outdoors for a while. So that means you guys at the end of the month are going to be stuck with John Novak and all of his smart stuff for a whole week. Either that or he's going to tell you guys to go on vacation. It's going to be one or the other. Oh, man. Congratulate her, Ron. She put up with me. We're a pretty good team, though. What do you guys think? What else should we talk about? We now know about vacations, right? Safia, have an awesome weekend. Great week this week. Nice. Ron, no kidding. Awesome week, Safia. Plans coming together more and more every day. Guys, we've had a couple people that got funded through Apex this week. Congratulations to you guys. People that stay funded with Apex this week. Congratulations to you guys. People sticking to their plan, not forming opinions. Congratulations to you guys. Top Step ends their promotion on Sunday. Right on. And I know Top Step changed their payout program a little bit too, and you can use NinjaTrader 7 with them for those of you guys that are scared of stability issues. Ziba, that might be a good one for you to look into. Termination condition still working, right? But my triggers are up. My smalls are above the large. My synthetics are up, but my large are down. just don't have rules met. There's NASDAQ. It made it right to those purple 1-to-1s. So Jerry, remember when I told you those purple 1-to-1s, especially on NASDAQ? Create a bounce spot, guys, for my NASDAQ traders. Keep eyes on the purple 1-to-1s. They're bounce points, and it's huge, and it happens a lot if you're a NASDAQ trader. And the cool thing is that if you never fight the small triggers on the NASDAQ, it kept you out of that mid band, even if it wasn't. It kept you out of getting in at the mid band, and if you took the close on the correct side of the small, you had an opportunity to make money right up to that fib before the second lower divergence. And now we're just trying to figure out what NASDAQ wants to do here. Post pictures, ask questions. Whoops. So Luciano, I have them open. So I'll have different workspaces open, and I'll just click on it, and then Shift F3 will toggle me through. So the key, though, is when you have multiple workspaces open, make sure that you close your untitled workspace, or it'll go to that blank one, and then you'll have to go over to your control center and go through it. So when I run on 7 or 8, my workspace is open. I make sure that that untitled one isn't, and that lets me just toggle right through. Yeah, well, they just kind of disappear into space. They're not even behind each other. So they're up one at a time. So like if I hover over my 7, you'll only see the crude oil ones, and then if I change it and hover over it, you'll only see the NASDAQ ones, and then if I change it again, you'll only see the S&P ones that I have. Termination condition is working. Once again, bad bottom, straight to resistance, 1-to-1s. Area's not broken. No reason to look for a long, guys. How amazing to have rules to keep you safe. How do we get to where we want to be? Let's talk about it again, to minimize your learning curve. This is how we're going to end the day. Post pictures of your trades in class, every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How will you know the difference? To be sure, you need feedback from us. We're here to help. If you place the trade on the simulator, you participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong. When you're new, it's part of what we do, guys. Ziba, all your clients waited all week to return your calls and emails, and now they all decided to call on the day that NASDAQ is active. That's okay. That's going to happen. Ziba, you want to know a true story, make you feel better about them waiting for today? Is every day I teach this class from 9 a.m. to 6 a.m., every day I miss all the great moves. Every day I miss all that amazing action that you guys are getting paid on so that I can be here to teach. And the key is to not feel like you're missing out. Because the second you convince yourself, oh, I'm missing out, it was perfect, I can't believe I move it, this sucks, you're going to change your plan to make up for that lost time. And I know because I've done it. And one of the reasons that I teach this class is so that John Novak can focus on his trading. This is paying my dividends, paying my dues. So it's okay. It's going to happen sometime. Every now and then, it's going to happen. Gary helping you guys with the top step. And Gary, I'm going to use this picture. I love it. Gary says potential breakout, waiting to break resistance, right? Not saying I think it's going to break, I hope it's going to break, I want it to break. Saying if it breaks, we'll look for it. Until it breaks, no dice. And sure enough, it hasn't broken. And it's still pushing down. Great, I love that picture. NASDAQ is breaking through. Notice that your triggers never change direction. No reason to go short or whatever that may have been, crude oil. And then guys, 50-50, right? large above, smalls below. Look at all these divergences. Look at those split triggers. Good stuff. Guys, life is good. Life doesn't have to be difficult. Trading doesn't have to be difficult. Smile lots, right? Take a deep breath, stretch your legs, do some yoga, have a glass of wine, enjoy all the wonderful things in life so that you can come into trading clear-headed and ready to go. We're going to do the same thing next week, guys. We're going to go Monday through Friday. We're going to talk about rules. We're going to talk about advantages. I'm going to praise the heck out of you guys for all of your amazing trades, and I'm going to work with you hand in hand to get you to avoid those problems that may be plaguing you. We're going to keep doing this process every day until it becomes clear, until it becomes easy, until you're doing exactly what you told us that you wanted to do. I promise to always do my part. I want you to promise to always do your part. I want to see what you're doing. And if you're one of my people that have gone off to being funded, right? And you're not winning every day and you're still having challenges, I want you to come back into this classroom and I want you to post. I want you to know that no matter where you are in your trading, you're welcome in the classroom. You're welcome to ask questions. And I'm excited to answer the questions because when you have the courage to do that, everybody in the room learns. So with that, guys, go enjoy your weekend. Have a blast. Hold hands with somebody special. Walk down the beach. And we're going to come back Monday morning. We're going to do it again. We're going to have an awful lot of fun. And we're going to get you guys exactly where you want to be. Take care, everybody. Thanks for being here this week.